Fueled rally, global stocks and European futures trade higher following tech-fueled gains on Wall Street. The Nasdaq 100 posts its best two-day rally since November. Earnings in focus, Microsoft kicks off the season. Reporting tonight, the tech giant is investing a further $10 billion in AI chat GPT. Plus, staying the course, Lagarde doubles down on her fight against inflation as the ECB and speakers point to more 50 basis point hikes.
Now let's take a look at the futures. It's nothing huge in terms of movements, but we're seeing the DAX futures, also the FTSE futures, holding on to gains, and it's really all about the tech and where the rally goes.
Yeah, absolutely. The centrality of the tech story, and of course we had the news, and the Nasdaq, of course, ending up pretty solidly on the day yesterday. You had the news around the upgrade by Barclays to some of those semiconductor players, and that really bolstered what you saw in terms of the Philadelphia Semiconductor Index. Gains there yesterday on that index of 5%, and that just fed into the optimism within technology around potentially a lower rate environment, potentially the softer dollar, continuing that trajectory, and then some of the cost cutting you've seen at some of these tech companies. But the stress test will be this week with those earnings. The FTSE 100 opening up just 0.1%. The deficit numbers for the month of December here in the UK, eye-watering, coming in much higher than the economists had expected. Over in France, the CAC current adding 21 points, and the Spanish IBEX up 0.2%. If this holds, you're looking at 4 straight days of gains for European equities. Let's switch it over and have a look cross-asset as we weigh up again the commentary from Madame Lagarde. The lady is not for turning when it comes to that inflation fight. Significant rate hikes will continue to come through the pipe from the ECB, was the line from Madame Lagarde. Her determination to get back down to 2% on inflation, that is the target, of course. Nasdaq futures looking just losses of 0.1%, of course, within the context that you've had the best two-day rally since November. Euro dollar single currency on the back of those comments from Madame Lagarde, 108. A little bit of strength coming through for the single currency of 0.2%. We're watching gilt again on the back of those deficit numbers coming through for the month of December, 27 billion pounds, almost double what was expected from economists. Interest rate payments very high now for the UK Treasury, 3.31 on the benchmark, just a move of 4 basis points. And Bitcoin has had a very strong rally, more than 30%, close to 40%, in fact, over the last 30 days. 23,000 is about that level now for the major cryptocurrency, gaining again 0.3%. Francine.
Now, we're not seeing many industries on the downside. So this is a picture for sectors. I'm seeing basic resources, real estate, banks, actually the biggest gainers, getting between 0.8 and 0.6%. Then, Tom, if you look at the 3 very modest declines, we're seeing energy pretty much flat, but on the downside, telecoms and healthcare. Now, let's get over to our Bloomberg's markets reporter, Valerie Teitel. Valerie, you're looking at this U.S. equity rally.
Yes, Francine, this U.S. equity rally has really taken some by surprise. I've got a chart here. It's a bit basic, but it tells you all you need to know. The S&P 500 index, they closed above 4,000 yesterday. It's the first time it's done that in over a month. We're now trading above the 200-day moving average, which means momentum is on our side. We've now rallied 12% since the lows in October, and we're up 5% year to date. Now, could this be shaken? Will this be shaken by Microsoft as it kicks off tech earnings tonight? We'll really be searching for clues as they're one of the first to kick off this earnings season for tech ahead of the bigger names coming next week. But this risk-on move, Francine, it is pervasive. Nearly all major global equity indices are now in the green. And in Europe, Francine, we're nearing double digits for all those European country indexes.
Valerie, thank you so much. A good look, of course, at the S&P 500 above 4,000, or Valerie Teitel. Now, the NASDAQ 100, well, the NASDAQ, is on pace for its best month since July. Investors turning a blind eye to the risk of a U.S. recession, loading up on stocks that were amongst last year's biggest losers. We're now joined by Benjamin Jones, Director of Macro Research at Invesco Asset Management and Bloomberg Team Leader for EMEA Equity Services, Ksenia Galushko. So thank you both for joining us. Ksenia, let's kick it off with you. When you look at what exactly is underlying some of the support or sometimes some declines for these markets, is it still all about central banks, or are we going to start looking at earnings and layoffs?
Absolutely, we are going to be focused on earnings in the next few weeks. Obviously, the fact that inflation is slowing and that the Fed might potentially start reducing the pace of rate hikes has been helping tech. And we've seen this tremendous rebound in the NASDAQ. Obviously, it's heading for the best month since July. This is a pretty tremendous recovery that we're seeing at the moment. But at the same time, investors are going to be very much focused on earnings, and Microsoft kicks off the results today. Obviously, the cost-cutting measures that we've been seeing, the news about job cuts at major tech firms, including Microsoft, including Google, including Spotify, that has been seen positively by investors in the past few days. But they will be focused on the outlook for the business demand that will be driving earnings for the rest of the year.
Ben, let's bring you in on this point then. I know you're pretty cautious and you think that maybe the equity market has overrun its skis on this front. The risk, of course, is you miss out on what has been a gangbusters, particularly tech rally, and you've seen that just in the last few days. Are you prepared to miss out on the upside around tech because of your caution with some of those macroeconomic conditions?
We are at the moment, yeah. I think at the moment the fear that we've got is, as you say, the market's got a little bit over its skis. It's been a very good start to the year, not just on the equity front, but also on the data front. We've obviously had some really good news around the weather. Gas prices off significantly. We've got China reopening as well. We can't ignore those good pieces of news, but I think just the equity rally in and of itself has run a little bit too far. For me, I'm a lot more confident at the moment about taking those relative calls right now. We're much more positive on places like Europe, relative to the US, and that's where we think we've got the edge at the moment. That's where we think we can see the value. So I think more confidence in the relative calls and just sitting this one out on the equity rally at the moment, because as Ksenia said, I think at the moment it has been about central banks, but I think we're very quickly transitioning to growth fears, and earnings weakness kicking in would be the worry.
So what are you buying in Europe right now? Is it some of the equities, and is it, you know, Germany because they have a much better energy complex over France, for example?
Yeah, so we like places like Germany relative to France. It's generally sort of a broad Europe against a broad US at the moment, which obviously is a very different stance than you would have taken over the last 10 or 15 years or so. Sector-wise within that, certainly still liking the energy sector as well. I know, again, there's some concerns around whether those earnings have gone a little bit too far, and with the oil price coming back, we see some weakness there. But I think generally, look, those companies are spinning off massive amounts of cash flow at the moment. And the backdrop that I'm looking for the rest of this year is that actually energy prices hold up reasonably well, even if you do get a broader economic slowdown. Now, that's partly because you've got China reopening and the sort of consumers starting to travel a lot more as well. But the supply side on the oil side just remains incredibly tight at the moment. So I don't really see oil prices coming down significantly from here, and those energy companies still in exceptionally good shape at the moment. The consumer side in Europe is the area that I'm a little bit more cautious on, but I think you need to be very nuanced in that space. I can see some of the luxury goods plays actually doing reasonably well, again, on that China reopening story. But the sort of the more middle and the smaller cap names, I see those more worrisome, really.
And that's interesting. You've seen that kind of play out with Primark and executives there, again, saying that the consumer squeeze is going to impact them, but the luxury, as you say, holding up at least for now. Ksenia, let's bring you back in. We are getting a divergent picture, it seems, when it comes to the central banks. Markets very much positioning for 25 basis points from the Fed next month, but the ECB and Christine Lagarde really doubling down on the need, as she puts it, to go 50 basis points, at least for the next two meetings, aligning, it seems, with the hawks within the governing council there. How does that play out for different asset classes?
Yeah, it's been very interesting because the market, at least in Europe, has been pretty much disregarding Lagarde's hawkish commentary. I know that she's been reiterating this hawkish stance for a few weeks now, but the market just has kept going. In Europe, the rally has been pretty outstanding this year, especially compared to the U.S. market. So since end of September, compared to the U.S. market, Europe has outperformed and is up about 30%. I mean, it's been an incredible rally and mainly driven by those cyclical and value stocks, because Europe is still a much cheaper market compared to the US. And also, it's full of industrial stocks, it's full of cyclical stocks, it's full of luxury stocks like LVMH, which is one of the biggest companies in Europe. These stocks have been benefiting greatly from China's reopening, and especially the DAX, CAC 40, all of these markets are now in a bull market territory. This would have been unheard of even like 4 months ago, would have been very hard to imagine. But thanks to China reopening, thanks to the avoidance of the energy crisis in Europe, we're seeing this rally, and it might have legs.
But Ksenia, so has that already been priced in? If you look at the China reopening and what that could do in terms of travel, consumer spending, especially on luxury stocks in Europe, do they have any further to go?
Yeah, it's been quite interesting, actually, looking at luxury stocks. As we wrote in a column last week, actually, analysts have been quite conservative in their outlook for luxury. So actually, there might be more upside to go from here, just because analysts have been cutting their expectations. So stocks could outperform, although, of course, these are some of the most expensive stocks in Europe. They are the equivalent of growth stocks and tech stocks in the US, but on the old continent, basically. But thanks to China's reopening, there's still a lot of upside left behind because of the potential shopping boost that could come, because of the travel boost that could arrive from that China reopening.
Ben, we had a call from Mike Wilson over at Morgan Stanley, speaking to our colleague stateside, saying that, look, 2024, there's going to be a pretty solid rebound, but for 2023, there is an earnings recession. It's not yet priced in.
Yep.
If you align with that view around the earnings recession, where is the vulnerability? Which sectors, and I know you talked about your preference, Europe versus US, are there particular sectors that you would really steer clear of, that you think are most vulnerable at this point?
I still think it's part of the tech sector. So I think it's geographically, US versus Europe, I think, is the key area. I think some of the consumer sectors, again, are still vulnerable to some of that margin squeeze. And I think you've really got to look across the spectrum and say, where are the margins most extended? That's where I think the vulnerability is likely to come through. I think if you think of places like energy and to some extent materials as well, there's just still so much bad news priced into those areas, even with the rally that we've seen over the last 18 months or so. So I think, look, value is going to play a much bigger role right now. Margins are going to take a much greater focus, and that's kind of the screen that we're looking at when we're looking at sectors. So it's some of the consumer sectors, it's some of the tech areas that we would be steering clear of at the moment, and it's focusing on some of the more older economy type of sectors that Ksenia sort of mentioned, the energy, the materials kinds of names.
Ben, how do you play the divergence play between central banks, and is it through currency? So, for example, a sterling or like a euro sterling, or do you go to the US?
So I think currencies are going to be a little bit tricky now. Last year was, with hindsight, relatively easy. You bought the dollar, you went home, and everyone was happy. But I think this year is going to be a little bit more nuanced than that. I think the key, and Tom, you mentioned it here, that the lady's not for turning. I think generally, actually, a lot of the central banks are not for turning. They are going to be laser focused still on inflation, and that's the thing that sort of broadly worries me at the moment. That is, if you get that earnings recession, that's bad for stocks, and again, there's some divergences there on currencies as well. But if you don't get that, then actually central bank policy is going to be much tighter, and then you get sort of the multiple compression. Again, that keeps me away from the US. In terms of currencies, though, I think, look, the dollar, we've had a soft patch, but I think that's pretty unusual for this part of the cycle. I would expect to see some of that earnings weakness, some of that economic weakness coming through, and that to give a little bit of another boost back for the dollar as well. So we've lightened up on our dollar positions, but we're not fully out of the dollar just yet.
That sustained downturn for the US dollar isn't yet material.
Isn't yet material, exactly.
Precisely because of your views on the central bank.
Precisely, yeah.
Action. Yeah. What about when it comes to fixed income? Where on the yield curve do you want to be? We're speaking to BlackRock earlier this week, yesterday, Wei Li saying, look, we maybe take a position at the front end, but we do not like the long end at this point. Think it's overdone. Yeah,
so actually, we're putting a little bit of duration on, but it really is, again, sort of dipping the toe in the water. And again, it's for these sort of longer-term views, really, that actually we are going to see growth start to turn down. We are going to have to see central banks react to this, but that's sort of a longer-term view. It's really dipping the toe in the water. In the fixed income space more broadly, where we're seeing some more attraction, actually is in the credit markets. Again, notwithstanding what I'm talking about with earnings turning down, we actually see a lot of corporates still in relatively healthy space, lots of cash sitting on their balance sheets still at the moment. So we're selectively dipping our toe into the investment grade market, for example. I think that's where we can see some opportunities. And again, been a fantastic play this year. You've got to start questioning whether that's gone too far. But if we're careful about it, I think you can find some good credit out there where the fundamentals are still pretty strong and can weather this storm going forward.
Okay, interesting insights, valuable insights. Thank you, Ben. In terms of the corporate resilience, maybe dipping your toe into investment grade, still liking some of those value plays as well. And Europe versus the US. Benjamin Jones, Director of Macro Research at Invesco Asset Management, and of course, Bloomberg Team Leader for EMEA Equity Services, Ksenia Galauchko. Coming up, Microsoft invests $10 billion in the maker of the AI workplace tool, ChatGPT. More on that, the implications, of course, and looking ahead to the tech earnings. That is next. This is Bloomberg.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Earnings season is here.
Consumers cautious in the UK.
Are we being overly optimistic?
The pain in earnings has not come yet.
Bloomberg breaks the numbers first.
Forecasting a double-digit decline in revenue.
On the back of record sales.
With exclusive expert analysis.
This year feels so different.
As economies move into slowdowns, earnings are likely to come off.
They're going to be really closely watched.
The important part is the strength of the core franchises.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to the Open. 17 minutes into the European trading gains of just 0.1% across the European benchmark. A redhead crossing the terminal. We are getting some clarity on the economic picture for France. Manufacturing PMI coming in. This is the good news. There's some bad news as well. But manufacturing PMI back in expansionary territory for the first time since August of last year at 50.8. The forecast was 59.5. So a pretty decent gain in terms of manufacturing PMI. Again, back in expansionary territory. Here's the bad news, though. Services PMI, and these are both for the month of January for France, coming in below the forecasts, 49.2. The forecast had been for 49.8. And the euro has just come off a little bit. You're still seeing a bit of upside for the single currency, 108. But that is the headline in terms of the redheads coming through for France manufacturing and services PMI for the month of January.
Now, Microsoft is investing $10 billion in OpenAI, whose artificial intelligence tool, ChatGPT, has lit up the internet since its introduction in November. Well, joining us now is Bloomberg's tech reporter, Aggie Cantrell. Aggie, first of all, a disclaimer. A lot of the people that were moderating, certainly at the World Economic Forum, asked ChatGPT what questions they would ask and then went, we're not 100% sure. But why would Microsoft make this investment in OpenAI now?
So, firstly, this investment is extremely large, $10 billion over multiple years, is going to be part of Microsoft's massive push into artificial intelligence. There are key benefits for OpenAI that are pretty evident. They will be able to use Microsoft's huge cloud computing power in order to wrangle the massive amount of data that they need to operate things like ChatGPT and DALL-E. But then from the Microsoft side, it's a little less clear, but we have some idea of what the applications for Microsoft would be, because we're already seeing that Microsoft is pushing this as a way of bolstering their cloud computing option, Azure, as Bloomberg Intelligence put it, to close the gap with AWS and to make that a competitive option. Also, the same goes for Bing, Microsoft's search engine product. Potentially, the AI could be used there in order to make it more competitive against the likes of Google. But what's notable is that OpenAI is a non-profit and operating as a cap profit company, which means that this is more about looking at what this technology could do for Microsoft products than, for instance, Microsoft attempting to purchase OpenAI outright.
Yeah, you definitely get the view that we are really just on the fringes of the potential of this new technology and now this investment from Microsoft. Aggie, I know you and the team are also looking at the earnings coming up. Such a big week for tech earnings amidst all these job cuts and question marks as to whether that's going to be enough for the tech sector and what's going to happen on demand. What are you and the guys looking at?
Yeah, so that's exactly the point there, Tom, that essentially these job cuts that we've seen in the tech sector in the last couple of weeks and months have all pointed to a dampened consumer demand and also worries about the future, or at least the near-term future for the big tech sector. And so what we're going to be looking at is, after these job cuts have already been announced by many of these companies, what that means about a strategy going forward. What sort of outlook are we expecting for the next several months in the tech sector, and when you have a more nimble staff, what that means for your development and growth going forward.
So the DOJ, Aggie, is also poised to sue Google over its digital ad market dominance. What do we know about that?
So we don't know a huge amount about this plan to sue Google yet. What we do know is that we're expecting it to be around their digital ad model. And so one way of looking at this, as we're expecting the DOJ to file this suit today, is to look at alternative similar suits that have gone through in recent weeks. And sitting here in Berlin, I'm reminded of the suit that was done against Google, the procedures that were taken against Google by the Federal Cartel Office here in Germany, in which they were looking at essentially the huge amount of data collection that Google does and how it then does that collection on its customers and then sells it back. So essentially what they presented as is a full ecosystem of data collection that Google has in terms of no other company can compete with Google in terms of the amount of data, the speed at which that data can can be acquired and the variety of that data. Google, of course, would say that the digital ad market is very broad, that it isn't just Google, the one player in it, but the question is what that looks like in terms of Google's ad offerings to its customers, and what that means in terms of a broader ad ecosystem that Google is then providing.
Okay, Aggie Cantrell tying a lot together for us. Thank you, our tech reporter out of Berlin, of course, on that DOJ probe of Alphabet, the look ahead as well to the tech earnings later this week and Microsoft's investment in AI. Coming up later this hour, we are joined by Riseo managing partner Mark Frappier. That's live from the IPEM Private Equity Conference in Cannes, one of the biggest PE conferences in the world. Stay with us for that conversation. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Season is here.
Wall Street expecting a bit of an ugly season.
People may be overly pessimistic.
We know growth is slowing.
Companies are going to have a lot of questions to answer.
Bloomberg breaks the numbers first.
Tons of banks coming out.
Some of the worst returns when it came to profit.
Markets really like that number.
With exclusive expert analysis.
What's your confidence in your outlook?
You got to be selective.
We still see a lot of opportunity.
There is a light at the end of the tunnel.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Let's get straight to the Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. Ford plans to cut about 3,200 jobs across Europe, with a majority concentrated in Germany. The cuts affect roles in product development and administrative areas. It follows workforce reductions in the US as Ford slashes costs in a shift towards electric vehicles. The Qatar Investment Authority has boosted its stake in Credit Suisse to almost 7%. With the purchase, the sovereign wealth fund becomes the Swiss bank's second largest shareholder, just behind the Saudi National Bank. Qatar took part in the Swiss lender's $2 billion convertible note issuance in 2021 that helped shore up its balance sheet after losses. Apple's long-anticipated mixed reality headset will attempt to create a 3D version of the iPhone's operating system. Sources say it will include eye and hand tracking systems that could set the technology apart from rival products. The device, likely to be called Reality Pro, is due later this year and is expected to cost around $3,000. That's your Bloomberg Business Flash. Tom, Francine.
Alice Atkins here in London. Thank you very much indeed. Your markets here currently just getting 0.1%. Futures lower in the US. Coming up, the Biden administration is confronting China with evidence that it could be defying global sanctions on Russia over the war in Ukraine. More on that scoop later. This is Bloomberg.
What are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
This is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. The French manufacturing PMI beats forecast, but services disappoint as the ECB's Lagarde vows to keep policy geared towards taming inflation on the continent. The FTSE opens in the red, but broader European market trade higher following tech-fueled gains on Wall Street. The Nasdaq 100 posted its best two-day rally since November. And earnings in focus, Microsoft kicks off the season, reporting tonight the tech giant is investing a further $10 billion in AI chat GPT. Now, Tom, if you look at the markets, also we need to talk a little bit about that deficit really ballooning here in the UK.
The deficit in the UK is incredible. For the month of December, 27 billion, more than 27 billion pounds, which is a full at least 17 billion, I believe, more than what had been estimated. The interest payments alone, making up about 17 billion, I should say, is almost double what the estimates were. The interest payments for the month of December, 17 billion pounds out of the 27 billion. So just pushing that overall debt pile even further and just really raising the pressure on, of course, the Treasury here in the UK. According, and in terms of the market reaction, I should say, you're looking at still 4 straight days of gains across European markets if things hold. It's a very modest upside. It was a gangbusters rally, particularly for technology yesterday in Wall Street. The Nasdaq ending up high again, the best two-day gains, in fact, since around November. in terms of what is happening in the tech space. You had an upgrade around some of the semiconductor makers from Barclays that fueled those gains as well, saying the worst of that semiconductor rout is now behind us. In terms of the data out of Europe, you did, of course, have a bit of a mixed picture when it comes to France. Now you have the German PMI as well. So Germany, January services PMI rising to 50.4. The forecast had been for 49.5. So services back in expansionary territory. In terms of manufacturing, that was a miss for the month of January. 47, the forecast had been for 48. So a very mixed picture when we weigh up this data, at least on the top line. Europe, France versus Germany. And we'll see how, of course, the euro reacts to that. You're seeing that now, 108. Not a lot of movement coming off in terms of the gains, the earlier gains. So pairings on the early gains as investors weigh up the implications of the mixed picture on manufacturing services data across France and Germany. Let's have a look at how the sectors are playing out then. The FTSE 100, by the way, is one of the major indexes in negative territory this morning. Part of that is down to AstraZeneca, but also Glencore weighing on the FTSE 100. In terms of your technology, in terms of your sectors, technology, of course, leading the pack on the handover from the US, getting 0.5%. Insurance also up 0.5. You have about 6 sectors currently in the red. Energy at the bottom of the list, down 0.4%. Francine.
Now, Bloomberg has learned that the Biden administration is confronting China with evidence that Chinese companies could be assisting Russia's war effort in Ukraine. For more on all of this, we're joined by Mark Champion, Bloomberg's senior reporter for international affairs. Mark, thank you for joining us. I mean, this is surprising, and yet it's not. Did it surprise you that this was happening, given their very neutral stance on the war?
No, I would say it's not especially surprising. What's interesting is that the U.S. has felt the need to sort of let this be known, however quietly. It's a very, very delicate balance that China has taken from the very beginning. They are strategic partners with Russia. It's a very serious and deep relationship, particularly personal, between President Xi and President Putin. More recently, they've let it be known that they were upset that President Putin hadn't given them forewarning of the invasion. But nevertheless, they've tried to balance all the way through the position of being, at the same time, Russia's greatest ally and also neutral in the war, which is essentially an impossible balance to maintain. So they have been supporting Russia, but mostly financially, so through the purchase of a lot of oil, so their imports have grown greatly from Russia, and they've also exported more. So what the Americans are saying essentially is that some of the stuff that's getting exported now is of concern.
China, as you say, is walking a fine line. And I think it's really interesting you point out that personal relationship. It's quite evident, isn't it, between the two presidents. But it is a fine line for Beijing as they weigh up the potential sanctions impact on some of their global companies. Is the needle starting to shift, though, for Beijing? Are they starting to pick a side in this?
I think that's essentially what the Americans are trying to figure out. We don't know the details of exactly what has been transferred. It sounds like they are also on that walking a line where they may have, like with tax, they may have avoided the sanctions, but not evaded the sanctions. So, we don't yet quite know, and it's quite likely that the Americans aren't yet quite sure, A, exactly how far this extends, B, what level of permission was given by the government to the state companies that are doing this, what level of acknowledgement. So there's quite a lot to work out. And it's clear the Americans are working very carefully because they do not want, at this moment, a moment when they've been trying to stabilize the relationship, a big blow-up. It wouldn't really serve either of them.
Yeah, so we'll be watching the Secretary of State Blinken on his visit to China in the coming weeks. Thank you very much indeed, Mark Champion, of course, on the latest in terms of the frictions vis-a-vis Washington and Beijing over potential step up in support from China to Russia. Mark Champion, Bloomberg senior reporter for international affairs. Let's just switch focus briefly away from the geopolitics to some of the individual corporate stories to bring to your attention. Of course, we are in the midst of earnings. We're very much focused on what's happening in the technology space. This is one of fans' favorite stories. Logitech, technology hardware, gaining 0.3%. Sales missing estimates for the third quarter. They came in at, $1.27 billion US. The estimates for 1.34 billion. And interestingly, this company, Logitech, they've done so well during the pandemic, of course, in terms of the demand for hardcore and tech hardware, I should say, saying they actually see sales falling between 13 and 15% this year, and the macroeconomic conditions remaining challenging. Swatch, very different story, of course, in terms of watch demand. A massive hit for the month of December out of China, down 50% in terms of their sales, but they do expect profits to soar this year on a rebound out of China. They're expecting sales could even reach a record of 9 billion francs this year. Associated British Foods, of course, the owner of Primark, currently down 1%, 18 points on the back of better than expected sales in the Christmas period, but they did keep their profit guidance unchanged.
Hang on tight, Logitech was gaining 0.3%. It's now unchanged, so a bit of volatility there. The Qatar Investment Authority has boosted its stake in Credit Suisse to just under 7%, making it the second biggest shareholder in the Swiss lender after the Saudi National Bank. Now let's bring in our finance reporter, Tom Metcalf. Tom, one of our most top-read stories on the Bloomberg terminal. We actually caught up with the QIA. They did not give us the scoop last week. But this is not really the anchor investor that we thought that Credit Suisse First Boston could get, right?
No, exactly. So their stake went from about 5.5% up to sort of close to 7%. So, you know, there was a rights issue, so they clearly were buying into that and up in their percentage stake. But, you know, if you look at the credits for shareholder sort of register now, right at the top is the Saudis, so they've got about 10%. Then the Qataris, and a one-time big holder, Hero Associates, is now down at 3%. So they've taken a different view. They've said, you know what, we want to get out of Credit Suisse, both by not participating in rights issues and also, we think, by selling a bit. So they're down to like 3% now.
They did have a double-digit holding in their Hero, and so it's been quite a significant drop in terms of their holding.
Yeah, no. That's a clear change of strategy, which is, you know, if you've been following Credit Suisse for a while, you know, for a long time they were in there sort of saying, hey, we're sticking around. So that was a big change. Okay,
the Saudis and the Qataris were an important lifeline for Credit Suisse, and we'll see if that stake continues to increase. Tom Metcalf with the important context on that Credit Suisse story. Thank you very much indeed. We have some lines crossing right now around the Defense Minister of Germany, Boris Pistorius, and the NATO Secretary General Jens Stoltenberg meeting, as you can see, in Berlin. These are live pictures. That, of course, is the German Defense Minister that you can see on screen now. We know the Germans are under an immense pressure to, at the very least, allow countries like Poland to start moving some of their Leopard tanks into Ukraine, if not give a full green light to German exports of the tank. But certainly that pressure is coming from not just Washington and Kyiv, but some of their close allies as well, like the UK. And we will see what the response is. I don't know if we're going to listen in, but these are live pictures, as we say, about an important, of course, geopolitical question for the Germans around whether or not they are prepared to allow those Leopard tanks to move into Ukraine. Francine.
Coming up, we're joined by Eurazeo, head of buyout, Marc Frappier, live from the EPEM Private Equity Conference in Cannes. Eurazeo is also quite special because it has one of the most formidable chief executives, female chief executive, Virginie Morgan. That interview is next, and this is Bloomberg.
Has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
News breaks. No
one covers the world like Bloomberg.
In addition to him pleading not guilty, as we had expected, to 8 criminal counts here, there was a lot else that happened.
1 million people are getting infected every day, and that's going to rise to 3.7 million by January.
The UK is the only G7 economy that hasn't returned to its pre-pandemic level yet.
Bloomberg, your global business authority.
Welcome back to the Open, everyone. 42 minutes into European trading day, and we're bumbling along nicely. I mean, the FTSE is seeing a bit of pressure. That is mainly due to maybe a bit of investors' worry over the budget deficit. I think it tripled because of inflation. This is one of the main concerns for Rishi Sunak. So the FTSE down 0.5%. Everything else is kind of holding around 0.1% higher, Tom.
Okay, let's move away from the misery of the UK then and turn to the delights of Cannes, where Danny Berger is standing by. After a tumultuous 2022 for private equity, driven by economic and geopolitical uncertainty, the sector is looking to bounce back. Over 1,000 companies are gathering at IPEM in Cannes for Europe's largest private equity conference. For more, let's cross over to Danny Berger, who's on the ground in Cannes for us this week. It's a tough assignment, joined by an excellent guest. Danny, good morning.
Indeed, it is sunny. We're having very interesting conversations here. Nothing to complain about, and it's only getting better. Joining me now, I'm pleased to say, is Mark Frappier, Executive Board Member and Head of Buyout at Eurazeo. Mark, thank you so much for joining this morning.
Thank you for having me.
Look, it is sunny out here, but in the industry, there are these concerns of the storm clouds, of higher rates, fears of the economy, financing is hard to come by. Would you describe this period as a paradigm shift for the industry? Has something fundamentally changed?
I wouldn't go as far as saying this is a paradigm shift. This is a transition. And I think it's a welcome transition. We know that rates have been low, prices have been up, and people were wondering where would it stop. So to some extent, it's a recess, and it's good to have that. And people can take back their breath and think about the fundamentals of what we do and focus on high quality assets. And so I think it's a good way to sort things out, and we'll see that over the long run through performance. And you think about the rate today, they're barely where they were 5-6 years ago. So it's not a paradigm shift. It's just a not so smooth transition, but it's a needed transition.
I was going to say, it perhaps the rates are lower than decades past, but this did happen very suddenly. Have most companies been able to keep up with that, especially so many who have floating note rates?
Yeah, no, that's a very good question. I think part of our job is to anticipate headwinds. And this was one of the headwinds, including inflation, energy, price increases. And so early in 2022, we spent a lot of time with our capital markets team and making sure we hedged our floating rate notes. So about 70% of our portfolio today has fixed rate now, which were set early 2022. So we've anticipated that.
What else are you talking about with portfolio companies right now? Are you telling them to cut costs, to batten down the hedges for a recession?
Yeah, pretty much. I mean, we spend a lot of time in preparing, notably 2023, which is going to be the challenging year. I mean, 2022, everybody was looking at commodity price increasing, labor cost potentially increasing, and inflation is a big driver for that. So we spend a lot of time towards the second half of last year, planning for slightly lower demand, higher cost, and making sure we pass on some of this cost increase. So the ability for our companies to have true pricing power is an important aspect. And so it relates to the discipline that you need to have when you invest, and making sure you invest in companies that have real strategic, positioning, strong differentiated positioning that allows you to pass on your cost increase.
Public markets seem to feel better about inflation and the direction of that. Are you seeing that within your companies? Are price pressures starting to ease at all right now?
We're seeing, surprisingly, we were very anxious in the first, second part of 2022, and we had conservative budgets. So we don't know. It's too early to say what 23 will be looking like. I can sense that the public market is anticipating some sort of return to the norm and some relief. But from an economic standpoint, from the business perspective, it's way too early. So we'd rather, plan for the worst and hope for the best. And this is what we do for a living, making sure we anticipate those. So let's see. I'm optimistic by nature. So I'm pretty happy about, the Chinese reopening. So it eases some of the, economic uncertainty and some of the geopolitical tension we face in
On that note, I know you have a vehicle that invests in European companies exposed to China. Have you seen any of that China reopening benefit yet?
We are starting to see it.
And what does it look like?
Well, on multiple fronts, I think. The good thing is you can travel back to China. So I'm going back to China in about 2 weeks, first time over 3 years, to see our investors, to see our portfolio companies. And it remains, the number one economy going forward. It is going to be, despite, the fact our economies are getting more and more segregated. If you have good businesses in Europe that have quality products, quality services, they still have a role to play in China. So our responsibility as an investor is helping those companies tap into opportunities and addressable markets. So China is difficult, but if you have the right partner in China, you can help those businesses grow across many sectors, high-end services, technology, medtech. These are areas where there's still needs in China. And therefore, we're supporting those companies building their presence in China with the backing of the Chinese Sovereign Wealth Fund. So that's super helpful from a local demand. And also from, a local demand here in Europe. China exports a lot of tourists.
Yes,
and
more
we're hoping
tourists,
for them
more
to come
people
back.
buying things.
Exactly.
We were talking just a moment ago about the compare and contrast between the public markets, more optimism, private market. But one of the big criticisms that came out of 2022 was this massive sell-off in public markets. And as one hedge fund manager, Cliff Asness, put it, that private equity was just making up prices because they don't have to mark to market. They were creating an illusion that everything was holding up. Do you think he has a point at all?
No, I strongly disagree. I think, it's a question of perspective on, when do you value, on which horizon. And the beauty of our business is, we're investing in companies for 4 to 5 years minimum with a strong transformation plan. We spend a lot of time, especially in the buyout, we transform businesses, we scale them, we help them expand internationally. So there's fundamental work going on that drives value creation. And, 90% of the value creation is done from, top line growth, EBITDA margins improvement. And so you need to see that work, through the cycle and paying off. And so, even today, if you're not planning to sell your company this year, there's no point of marking it down because in the next 2, 3, 4, 5 years, it will continue to grow. The market will have turned. And so fundamentally, there's value that is not captured because you don't have to sell right now.
Do you think, though, if the downturn is longer and there is a bear market, again, this is one of the criticisms that perhaps the industry is underplaying risks to its investors?
Yeah, we'll know over time. I mean, there's a risk for sure that lower quality assets will suffer and won't be able to recover because as the cost of debt increases, you're swimming against a stronger tide. So your fundamental value creation has to exceed your cost of debt at least if you want to create value. So clearly the tide is higher, is stronger than it was a year or two back. But again, it's only 3%.
Yeah.
It's not a massive increase. And so my strong belief is you have to stay very disciplined, and the people who've made investments in high quality assets that have fundamental value creation capabilities with growth rates that are double digit, they'll offset the cost of debt. So it's not an issue, and their long-term value will materialize. For assets that are barely break even from a value creation standpoint, this is clearly more challenging.
That's exactly where I wanted to go, because with cheap financing, it lifted all boats, essentially.
Exactly.
So are those companies in trouble then? And quickly here, Mark.
Most of investors don't have to sell, so they have to do their homework.
Okay.
And so the jury's not out until you've done your homework, you've maximized your chances of creating value, and then when you you have to sell, the market speaks. But most of the assets that traded last year were good quality assets. So, and that's why you see the market, the M&A market going down is, 40% down, because only the good assets are trading today. So there's a stack of assets where the jury's still out.
Okay, Mark, thank you so much for joining this morning. Mark Frappier, Head of Buyout and Executive Board Member at Eurazeo. Francine, Tom.
Danny, thank you so much. We'll have plenty more from Danny Berger at IPAM in Cannes. What a beautiful day out there in Cannes. Not dissimilar to London. And in the next hour, we're also speaking with Andrea Davies, InvestCorp Managing Director, also live from Cannes. Now, we're just getting some breaking news from the NATO Secretary General. He's Mr. Stoltenberg. He's saying that he is confident that there will be a solution soon on the tank deliveries. This is the Leopard tanks that Germany so far has blocked or has severely encouraged, increasingly encouraged, for example, even some countries like, of course, Poland, not to send them through. Stoltenberg saying that Putin is planning new offensive. He's also saying that, of course, the German leadership is more important than ever.
Yeah, the Germans coming under a lot of pressure over the Leopard tank issue to Ukraine. Coming up, an $11 billion case at the UK's High Court could threaten Africa's largest economy. We bring you that story next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Let's talk about Nigeria, and the government could be on the hook for a debilitating $11 billion payout in a trial at the UK's High Court. Well, let's get more with Bloomberg's Jennifer Zabazaja. Jen, thank you for joining us. I mean, first of all, it's actually incredible that this is all playing out in a UK court.
Yeah, I mean, Fran, when you look at this case and how far back it's gone, it's really quite incredible. And the reason why it's in the UK court is because this company, P&ID, Process and Industrial Development, was started by two Irishmen, one of whom is deceased. But this court case dates back to 2010, and it was before President Buhari's current government. There you can see a bit of the timeline there. And really at the heart of this case is this dispute about a contract between this company, P&ID, and also Nigerian government officials officials. What we hear from the company is that Nigeria did not follow through on their side of the bargain. But Nigerian officials are saying that this case from the beginning was due to corruption, was due to bribery, and so they don't want to pay up. And really what it started as was $6.6 billion, which a UK court awarded to the company, skyrocketed, as you mentioned, to $11 billion right there. It's a third of Nigeria's foreign reserve. So really not a good time for the company to, or for the country, excuse me, to be dealing with this at all.
What could it mean for the country in terms of the economy?
Right, the economy. I mean, we're about a month out from one of the biggest elections we're seeing in the continent's history. And Nigeria already is dealing with a number of issues. Inflation north of 21%, 80% of government revenues are going to debt servicing. And so if they were to lose this case, you can expect to see the government really you can expect to see the government really advising against paying this up, and whoever becomes this next president is going to have to decide whether or not they're going to need to settle this case or you know, continue fighting it as we've seen over the past decade.
It's a really, really fascinating story. Thanks for bringing us the latest on that. We watched that court case. Jennifer Zabasaja, of course, Bloomberg's Africa correspondent in London. Plenty more coming up. Your markets across Europe just gaining a little under 0.1%. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Tech earnings kick off tonight with Microsoft. The software giant is investing a further $10 billion in AI tool ChatGPT. German manufacturing PMI misses while services beat. That's as the ECB's Lagarde vows to keep policy geared towards taming inflation on the continent. And the UK deficit soars to a record £27.4 billion. That's as inflation-linked debt and subsidies strain public finances. It's basically an inflation story for the deficit. Now, first, let's check in on the markets. We're moving sideways. No huge moves that we need to talk about. There are a couple of things that actually we just need to keep an eye on. First of all, it's moving treasuries. Second, if you look at some of the differentials going out there, and then, of course, a big test with technology stocks that's coming in later as we start to get earnings. Expectations, of course, that the Fed will moderate its tightening campaign are driving a new year rally for assets from tech to emerging markets, but that's also sapping some of the dollar strength and giving breathing room to importers outside of the world's biggest economy. Overall, this is what I'm looking at also in terms of some of the services PMI. It is a little bit backward looking because it's January. Manufacturing PMI coming in at 48.8, a bit better than expected, but it's still under 50, which means that it's a contraction. And then services PMI rising 50.7. That's also a little bit better than expected because it's above 50. It also means an expansion. Now, we also have some top guests this hour. First, we speak about the energy crisis with Stéphane Auvenier, the new chief executive of Europe's biggest gas grid operator, Snam. And then we discuss a global push for wind and solar power with Adair Turner, chair of the Energy Transition Commission, plus our exclusive interview with the chief executive of the world's largest PR agency, Richard Edelman. But first, let's check in on the markets. Tech stocks leading gains on Wall Street in the run-up to earnings this week. That's helped set the Nasdaq on track for its best month since July. Investors turning a blind eye to the risk of a U.S. recession and loading up on stocks that were amongst last year's biggest losers. So let's get straight to Christina Kino, managing editor for Bloomberg City Latest. Thank you, Christina. If you look, actually, are they really loading up on some of these stocks, or is it just a bit of movement as we get into earnings season?
It's probably a little bit of both, Francine. I mean, I think we've definitely seen the bit of revival in tech in January because it just got so battered last year, right? And so you definitely see a few bargain hunters jumping in and thinking, all right, this is the time for me to load up on these things. But there's definitely a subsector of investors that are thinking now it's become a bit of a value sector, and these are some of the tech stocks, especially in big tech, right? We're talking about the FANGs here, becoming really, really expensive at the start of 2022 and then having their fall from grace. And so some investors really seeing opportunities there and starting to treat them a bit like value stocks. Whether that is misguided or that makes sense is another question altogether.
I mean, there's a lot of things that don't make sense in these kind of markets. One of the other things that really caught your eye is the fact that there's a hedge fund, Vantage Point, basically saying there are risks in the U.S. economy.
Absolutely, Francine. And I think that also ties in with the revival in tech and some of the riskier assets that we're seeing in the U.S. markets and really global assets generally, right? There's really this narrative of a soft landing that has enamored investors. And, we know 2022 was such a bad year that investors are really so willing and so eager to latch on to any positive narrative for 2023. And this is definitely at the forefront. But I think we're still a long way to go from seeing that inflation in the U.S. getting back to the Fed's target. They're going to have to do a lot more work to bring that down. And so that really, I think, just should bring up the risk of recession, particularly in the second half of this year.
And so what does it mean for the Fed? Do they need to break the jobs market to get inflation under control?
I mean, it certainly is pointing toward that direction, Francine, just because what we're seeing at the moment is still very much a job-full recession, right? Where we're seeing a little bit of signs of inflation taking its toll on the consumer, yes, and companies starting to prepare for that recessionary environment with layoffs and things like that. But the job market in particular really has remained quite robust. And we know, for instance, that the Fed has succeeded in getting inflation down to near double digits, to around 4 or 5%. That's the easy part. Getting it back down to target is the harder part, and they may have to turn to breaking the jobs market to accomplish that.
Christina, one of our biggest stories, of course, in terms of corporates is the Qatar Investment Authority boosting its stake in Credit Suisse. I mean, this is not the anchor investor that we thought the Credit Suisse First Boston would get, but does it have, bigger implications for the sector as a whole?
Yeah, I I mean, I think at the moment, just given the upheaval that we've seen in banking, we're definitely seeing more signs of, I guess, M&A targets starting to crop up, right? I mean, Credit Suisse has definitely been at the forefront of one of these targets for such a long time, especially all the upheaval that it's faced last year. But I think broadly in the banking sector, we're starting to see kind of themes of consolidation. Again, investors kind of starting to bargain hunt for banks that are particularly ripe in the making as a particular acquisition target. And I think, you know, as we head again into this kind of challenging, uncertain environment, you would probably expect to see more of this sort of activity moving forward.
Yeah, I mean, let's see if regulators get behind some of the cross-border acquisitions. Thank you so much, Christina Aquino, managing editor for Bloomberg City Latest. Just on that story with Credit Suisse, I don't know if we have a share price, but it would be great to show if we do. This is on the back of, you know, if you look at all the trials and tribulations of Credit Suisse, certainly its longtime largest shareholder, Harris Associates, David Harrow, owned about 10% just 12 months ago, now reportedly holding below 3%. So maybe the QIA came in thinking and believing that this was a bargain. Coming up next, we speak with the Chief Executive Officer of Snam, the operator of Italy's natural gas distribution network. We'll have plenty more on that and what it means for the energy complex. This is Bloomberg.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun.
We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, Italy's natural gas network operator Snam says it aims to make 10 billion euros of investments in the 2022 to 2026 period, pouring funds into the infrastructure required to hit Italy's energy transition targets. Well, joining us now is Snam's Chief Executive Officer. He's Stefano Venier. Thank you so much, Mr. Venier, for joining us on Bloomberg. So first of all, just talk to me about the energy complex. It is quite incredible, given the war in Ukraine in the last 12 months, that we finished 12 months afterwards in a better place where we started. What does it mean for Snam?
It means that we have the opportunity, of course, after this transition to, let's say, reposition the company in Italy, and also thanks to the fact that Snam is the largest TSO in Europe with the entire value chain, since we cover transportation, storage, and LNG infrastructure, okay, to position and support also Italy in a possible new role toward the central part of Europe and the security of supply for part of the southern part of Central Europe that is now affected by the, let's say, drop in flows from Russian gas.
So does it mean that you can also, do you have extra capacity to import, for example, from gas from Algeria or elsewhere?
We will work on that in the sense that for time being we have used that extra capacity to, let's say, offset the decline in the Russian flows, using that capacity to import more Algerian gas in the short term. But in the midterm, we will work on strengthening the south-north transportation capacity to make available for the surrounding countries also some of the capacity and some of the flows we might collect from, let's say, Azerbaijan or Algeria, or even in the mid-long term from Libya.
As investors get to know you, there is, I guess, some investors were maybe disappointed at the margins about a plan that they did not see as ambitious enough in terms of reorganization and structure and what you're planning to do. Was this deliberate so that you can exceed expectations?
Of course, we set the targets in a way that could be considered a bit conservative to that extent, but we wanted to have, let's say, foot on ground and be consistent with the opportunity, let's say, progressively develop this infrastructure. Of course, we have a lot of volatility in the financial markets and inflation, and that will drive, of course, also the development of revenues and profitability, given the fact that we work on fully regulated business with revenues that are driven not only by the investment, but also on the allowed return that is embedding also the inflation and the interest rates in the market.
Talk to me a little bit about M&A. So there are things that are on the block that you're trying to sell. Have you got any interest, and is there anything that you'd be looking to acquire?
I think the primary target is to deploy 10 billion euros of investment. That is the first target. Then we have also a portfolio of associates we manage, and we can use part of this portfolio also to support some acquisitions inside of the country where there are some significant and strategic assets that could represent an opportunity for a company to further expand and further consolidate the role and becoming, let's say, significantly the larger TSO operator in Europe, because thanks to the new floating vessels we will have on stream within the next 18 months, we will become one of the largest LNG infrastructure operator in Europe. We are the largest transportation company and the largest storage company.
So is bigger better? Does it give you pricing power, or does it just make strategic sense?
It makes strategic sense in the sense that it can create a platform for further opportunities to convey additional flows of gas toward, as I said, part of Europe. We set up a sizable capacity in reverse flow from Italy to the rest, to the surrounding countries, and we can leverage on that, and we can optimize the infrastructure. What we have seen during this crisis is the fact that having an integrated operator on TSO makes you in the position to better react on the possible, let's say, changes, and that cannot be only from geopolitical side, but can only be in connection with the transition.
Stefano, talk to me a little bit about some of your holdings, for example, in Terega in France, but also ADNOC in the UAE. I mean, how are valuations looking? Are you looking to sell off some of those stakes?
Not sell off in itself, because these assets are providing a very attractive return. It's about 9-10% cash yield. These assets will be used opportunistically to redeploy capital in, let's say, more strategic assets. And more strategic assets means more in connection with the infrastructure we have in Italy and in the other countries, because we control also a sizable stake in the pipelines that connects Italy toward Austria with the Russian network, and the TAP with Azerbaijan, and the southern corridor to Algeria.
What kind of price range are you expecting for gas and energy prices in the next 12 months?
I think in the short term, next summer, I think much will depend on the total amount of gas we will have in the storage at the end of the winter season. If the level will be maintained at the current level or sizably more than the year before, in summer we will have a reasonable prices, okay? Next winter, much will depend on how cold the winter will be, and that will influence the development of the gas prices going forward. And finally, if any Russian flows will be still there or they will turn down to zero.
We saw a lot of European heads of state not being behind the Inflation Reduction Act. I mean, really being against the Inflation Reduction Act and some of the subsidies that's happening in the US. But should Europe have a similar plan to accelerate the transition?
I think so, yes. We need to rapidly set up the mechanism to support either the green gases like hydrogen and the carbon capture that is taking ground as one of the solutions for, let's say, reaching the carbon neutrality. As a matter of fact, we don't have a silver bullet. We don't have a technology that can solve all the problems in the transition. We need to support these, let's say, possible technological solutions. And the Inflation Reduction Act acted sizably in terms of investment and support on those technology, and we cannot run the risk that all the worldwide money will move to United States rather than Europe.
Stefano, thank you so much for joining us today. That was the SNAM Chief Executive Officer, Stefano Venier. Now, coming up, we speak to the chair of the Energy Transition Commission on green finance and energy transition for the UK. Don't miss that conversation with Lord Adair Turner. That's coming up next, and this is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Do you think today it's easier for a black entrepreneur to start a company, or no more easy than it was 20 years ago or 30 years ago?
If it were easy, you would see more Bob Johnsons, more Michael Jordan, more Magic Johnsons, and Oprah Winfrey's and the like.
Freezing temperatures in the UK have weighed on wind power output just as usage of domestic heating ramps up. National Grid deployed its emergency tool for the first time yesterday and today, asking Britons to cut electricity use in the peak early evening hours. Now, here with me, Lord Turner, Chair of the Energy Transition Commission. Thank you so much, Lord Turner, for joining us. First of all, what's the energy complex in the UK looking like right now?
Well, we are on a transition to a system, an electricity system, which is heavily based on wind. By 2030, 2035, we'll be getting 70% of our annual electricity, I suspect, from wind, primarily from offshore in the North Sea. The inevitable consequence of that is that we have an intermittent supply, and we will have some periods where we have really almost excess supply. We saw it in the first 2 weeks of January. We had mild, windy weather. We were already hitting over 50% of our electricity from wind then, and that will go up. And then we'll have other points when we're short of it. So we'll have to invest in storage, and we'll also have to invest in the sort of techniques which National Grid are now deploying about encouraging people to move their electricity demand away from the peak hours.
So how quickly can that happen so that we don't have to have the coal plants on standby?
Well, I think the coal plants will be on standby for another couple of years, but I think beyond that we will close them down completely. We have a significant amount of gas capacity, and what will happen is that gas capacity over time will be run less and less. It will only run at the peak hours, and eventually we will either add carbon capture and storage to that gas capacity and make it zero carbon, or we will switch it over to hydrogen which we will make when we have excess electricity and then burning gas turbines when we need it. So we are on a transition to a new zero carbon system. I think we're roughly going at the pace required. So I don't think we should panic or worry about this current situation. And these national gas initiatives are exactly the sort of getting people to focus on the fact that electricity is more expensive at peak hours. It's part of the system.
But is the government focused enough on green energy? So we also had this UK deficit soaring to a record. This is because of inflation. Yeah. Does this just take away all of the momentum in any kind of, real wallet behind the energy transition?
Look, I think in the UK, the transition in our electricity system, I think, is now unstoppable. Right. And I'm fairly confident that by mid-2030s, we will have a close to zero carbon electricity system. The bit that I'm worried about is the residential heat system, which primarily relies on gas boilers at the moment, where we have a vision that we should insulate our homes better, install heat pumps, but where frankly, we do not have a strategy which sets out...
And it's expensive.
It is in some ways. This is the most expensive bit of it. I mean, let's be clear what will happen to household budgets over the next 15 years. Once people have bought electric vehicles, they will be saving money on their road transport. But on the residential heat side, there is significant upfront investment required before you get the benefit of lower electricity prices, lower electricity use. And for higher income people, that's fine, they can just invest it. Our big challenge is the bottom half of the income distribution. We will need large subsidies to help them insulate their homes, install the heat pumps.
Lord Turner, why not do an Inflation Reduction Act like the US? It gets prices down, it spurs the economy, and we could even see some growth.
Well, look, I think we will have to have significant subsidies. The one thing which I think is probably missing in the Inflation Reduction Act in the US, as best I've seen, is a plan for residential heat. It may be in there, but a lot of other things. There's huge subsidies for hydrogen, both blue hydrogen and green hydrogen, big subsidies for electric vehicle, battery plants, etc. But look, we will have to...
How quickly do we need it?
Well, we are doing some things. I mean, there is support for the battery factory, which Envision is building in Sunderland. And just to do pure disclosure, I am on the board of that Envision battery company. So yes, we are supporting, as countries are across Europe, a set of battery investments. There are significant supports for hydrogen investments. I think we may need to up the scale of that initial support and think about all the different sectors in the face of the Inflation Reduction Act. I mean, it needs to be said, the Inflation Reduction Act is extraordinary. We went from last May thinking that the US really couldn't get anything through Congress to something which, in some respects, I think is an over-the-top level of subsidy, almost a license to print money for some sectors of the economy.
Yeah, which is why so many European leaders are really against that. Lord Turner, can you talk to me a little bit about, if you look at battery storage, do we have the right technology in place to be sure that this is the one, or will it change 6, 7, 10 times before we get the right battery storage?
Well,
look, what's happening on batteries for electric vehicles, but this is also will be true for storage in the grid system, they're going through endless new generations. We talk about Gen 4, Gen 5, Gen 6, playing around with the chemical balance between nickel and manganese and cobalt in the cathodes of the batteries. They are continually improving. I don't think we're going to suddenly have somebody come up and say this is a battery which is 2 times better than the one before. But what we're seeing is maybe 10% improvements in what's called the energy density, how much energy you can pack into a kilogram or a litre. So those technologies are going through endless change, and the good news is there is huge R&D money being put in across the world to doing that.
Thank you so much for joining us. Adair Turner, there's the chair of the Energy Transition Commission. Now, we'll, of course, be covering all things UK every week on Thursdays at 9:30 a.m. in our half-an-hour special. Also, today, the UK government sinking deeper into debt for the month of December as rising debt interest payments and the cost of insulating consumers and businesses from the energy price shock really strained public finances. Now, coming up, don't miss our exclusive interview with the Edelman Chief Executive Officer, Richard Edelman. That's a conversation on the trust barometer and how Chief Executive Officer are feeling about investment in 2023. This is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Tech earnings kick off tonight with Microsoft. The software giant is investing a further $10 billion in AI tool ChatGPT. Euro area services and manufacturing PMIs beat as ECB President Lagarde vows to keep policy geared towards taming inflation on the continent. And the UK budget deficit soars to more than £27 billion, a record for December, as energy subsidies and debt interest strain public finances. We get UK PMIs shortly. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're waiting for some breaking news. It should come up in about 20 or 30 seconds. Some of the main sectors, or certainly some of the main corporates that we're watching out for. Let's start with Credit Suisse. So Credit Suisse actually not really changing that much, but this is the Qatar Investment Authority boosting its stake in Credit Suisse to about 6.8 from 5.6% previously. Now, with the purchase, the QIA becomes the second largest shareholder, just behind the Saudi National Bank. Now, remember, earlier this month, the longtime largest shareholder of Credit Suisse, Harris Associates, with David Harrow, which held at some point about 10%, reported a holding of below 3% for Credit Suisse. So Credit Suisse practically unchanged, but still one of our top most read stories on the Bloomberg terminal. Then UK, January, manufacturing PMI coming in at 46.7 instead of forecast of 45.5, so a touch better than expected. Anything below 50, of course, is a contraction. Services PMI coming below estimates, so it's still contraction. But it's interesting to see that services worse than expected, manufacturing better than expected. Now, the improving sentiment towards U.S. equities is at odds with a backdrop of weakening economic data and earnings. That's according to Morgan Stanley strategist Michael Wilson. Now, he says that though they are bearish on near-term earnings, they are more bullish than most for 2024. And Wilson spoke on Bloomberg Markets.
If the economy rolls over into recession, then it's very unlikely stocks will hold up. That's not priced. And the reason why it's not priced is because we don't know the answer yet, right? I mean, there is an opportunity for the Fed to perhaps orchestrate a soft landing, meaning no labor cycle. But that's where we differ, I think, from most people, which is if we don't get a labor cycle because companies are hoarding labor, that's actually going to be worse for margins in the short term. And then secondarily, if you don't cleanse it, you don't really have anything to get excited about. There's no re-acceleration then for growth next year. So as bearish as we are on kind of earnings in the near term, we're actually probably more bullish than most on 2024 because we think we're in this, boom, bust, boom environment that we've been talking about for the last several years. And you can't have your cake and eat it too, right? You can't say, oh, well, I'll just look through this valley and then play the next boom. Well, I mean, that's not really, advised. I think if you agree with our earnings call next year, then you almost have to agree with our earnings call this year, and the market won't look through that.
So, in terms of how you think this is going to play out, you think this is a near-term phenomenon. You think this is going to happen soon, Mike. Yet at the moment, I'm looking at the soft data rolling over. We're going to get the PMIs tomorrow, but I'm looking at the hard data holding up. I'm looking at the employment data in particular holding up. So which piece of data is going to get the markets to pay attention on the economic front and mark stocks lower?
Yeah, I mean, what it always comes down to is earnings. I mean, earnings is the hard data series that drives stock prices the most. I mean, we've always said that, and we continue to believe that. So we're just trusting our process, which is that, the leading indicators for the hard data is soft data. And the soft data has rarely looked this weak. So you have to be basically assuming it's different this time for the hard data not to follow. And, that's not a position that we want to take, particularly given that we just had a rally over the last 3 months, which has been spectacular. We sometimes get coined with being perma-bears, but last time we called for that rally in October, and we basically got chased off the screen then. So, what's amazing to me is very few people wanted to play that rally in the fall, and now people want to play it after it's already happened. And the last thing I would say about that is what people are getting most excited about are three things. Confluence of China reopening, which is good, and we agree with that. Secondly, gas prices have come down precipitously in Europe, which is maybe keeping them out of a recession, at least in the near term. And then you have the hope for a Fed pivot, which is also our call, that the Fed's going to pause after this next meeting. But the problem is you already priced all those things. The valuation now does not reflect the earnings risk that we still see in the U.S., which is not going to change from any of those three developments.
All right, a great look there by, I think, Morgan Stanley, looking at some of the opportunities out there. Let's do a quick market check. Now, we are Tuesday, quite a lot going on in the markets. All of this is basically superseded by some of the geopolitics also concerns out there. If you look at UK businesses, they're signaling also that the output fell the sharpest pace in 2 years. That's what we learned in the PMIs that just came out. UK companies really, worried not only about this potent cocktail of economic headwinds, but also the risk of recession that's increasing. Now let's also get to your Bloomberg first word news, and Finland has, for the first time, opened the door to potentially decoupling its NATO application from that of its neighbor Sweden. This is after the Turkish President Recep Tayyip Erdogan says he will not support Stockholm's bid to join the military alliance. Well, Turkey had agreed in principle to the applications, but went on to demand concessions from Sweden. Next month, Hungary is expected to become the final NATO member to ratify the candidates, leaving just Turkey. Bloomberg sources say the U.S. has confronted Beijing with evidence suggesting some Chinese state-owned companies may be providing assistance for Russia's war in Ukraine. Now, we're told that the alleged support consists of non-lethal military and economic assistance that stops short of wholesale evasion of sanctions. The UK's opposition Labour Party would work more closely with the European Union as part of a reset of British foreign policy. Labour's shadow Secretary David Lammy is set to outline the plan in a speech later today. Current polling suggests that Labour could win the next general election, which must be held no later than January 2025. Now, the world's largest PR agency sees economic optimism collapsing around the world. According to Edelman's annual Trust Barometer survey, many governments are viewed as unethical and incompetent. Well, the PR company canvassed more than 30,000 respondents across 28 countries. Well, we're now joined by Richard Edelman, the chief executive of Edelman, who also put this Trust Barometer together. And we saw each other, Richard, in Davos, where the mood, I have to say, was maybe a little bit too optimistic for our liking. Overall, and good morning to you, what surprises you the most about the Trust Barometer? Trust is going down, 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 down. At what point does it go back up?
So, Francine, I think the most impressive finding in the Trust Barometer this year is that there's a huge rise in business ethics, that in fact business is the only institution both competent and ethical, that somehow there's a big reliance on business to step into the void left by incompetent government on societal issues. 85% want CEOs to speak up on issues ranging from sustainability to diversity and inclusion, even geopolitics. So again, the responsibility on business is massive.
The concern, Richard, I imagine, is when you advise a lot of the chief executives, and if they talk too much about politics or foreign affairs, there's always a backlash. We see that with BlackRock on ESG, for example, and the Republican Party. So how do you toe the line?
I think that there's way too much fear that has been caused by the DeSantis-Disney conflict. And I think CEOs need to stand strong and recognize that 2/3 of employees say, I'll only work for a company where my values are equivalent to that of the CEO. 2/3 of consumers are belief-driven buyers. There's a new time now for corporations in society.
Richard, if you look at the Trust Barometer, I mean, I'm not seeing anything good apart, what you say about chief executives maybe taking the lead on societal issues. The polarized world is probably getting more polarized. The social fabric, you say, is weakening amid some of these divisions. How does a chief executive make it a little bit better when they have so much shareholder pressure to actually just get the numbers up?
I think the big job for business is to restore economic optimism, Francine. I think the necessity of making sure that people are reskilled, that there are jobs to go into, that we recreate industries in agriculture and others in a sustainable context. We've got to get people to feel good about the idea that their families are going to be better off in the next 5 years. There's not a single democracy in the developed world that's over 35% belief that my family is going to be better off. That's disastrous. I'm in France today. It's 10% in France, 10% in Japan. You can't have trust in institutions when you have such a dire outlook. And so we've got to give people hope for the future. And that's the job of business.
Richard, can business actually, reskill, upskill workers at scale, or will they always fail without the, current support from governments?
Great point. It absolutely has to be a combination of business and government, but it can't be business fighting government. And, for instance, in the U.S., we've got to make sure that there are connections between business and community colleges. so that it's an easier way to transfer workers to the next level of skill. Because we all know that automation is going to take jobs in retail, in real estate, in financial services in the next decade by 15%. So what are those people going to do unless we retrain them?
Richard, I hear this over and over again, that actually, we are too optimistic. This also seems what you're suggesting, that there's too much that we're too much pessimistic actually about the world economy, which is why a lot of families also distrust not only policymakers, but governments around them. Is pessimism in some way useful? So if you're a company and you guide down, if you're very cautious, does it mean that you make less mistakes, or do you think it's a spiral that almost self-fulfills itself?
I want people in companies to lean into the issues and recognize that geopolitics is something that's a new and fundamental part of their equation. That the U.S.-China standoff means that they have to diversify supply chain, but that's also an opportunity for nearshoring or inshoring and job creation. And I love the story of Discover Card, for instance, putting 2,000 jobs into inner city Chicago instead of offshoring for call centers. Again, take advantage of the moment to do two things at once: efficiency as well as improving.
Richard, thank you so much for joining us today. Richard Edelman there, the Edelman Chief Executive Officer. Now, we are also getting some important breaking news out of Poland. This is on the tanks that should be sent to Germany. So Poland, we understand, has formally requested Germany's permission to send Leopard 2 battle tanks to Ukraine. Now, this is something we did also speak to the Prime Minister of Poland last week in Davos. This is something he said he would do. Just a reminder for everyone listening at home or in the office, German law basically requires approval for the re-export of military equipment, meaning that the hundreds of Leopard tanks in Europe can only be sent to Ukraine with Berlin's consent. We understand that for the moment, Germany, if it hasn't gone as far as saying no, it's still very cautious, but it does seem that Warsaw, the government of Warsaw, now wants to work together to assemble some kind of coalition to try and pressure Germany to then send these German-made Leopard tanks to Ukraine. Coming up, we'll also speak to the Investcorp Managing Director, Andrea Davis, live from the EPEM conference in Cannes. That interview with our Danny Berger is next, and this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Earning Earnings season is here.
Wall Street expecting a bit of an ugly season.
People may be overly pessimistic.
We know growth is slowing.
Companies are going to have a lot of questions to answer.
Bloomberg breaks the numbers first.
Tons of banks coming out.
Some of the worst returns when it came to profit. Markets really like that number.
With exclusive expert analysis.
What's your confidence in your outlook?
You got to be selective.
We still see a lot of opportunity.
There is a light at the end of the tunnel.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Europe's largest private equity event is underway in Cannes. This year's EPEM conference comes after the sector experienced a pretty tough 2022, driven by economic and geopolitical uncertainty. Well, let's go live to Cannes and speak to Andrea Davis, Managing Director of Corporate Investment at InvestCorp. Andrea, great to speak to you. So thank you so much for coming on. How do you see the private equity world changing? Are there enough targets? Is valuation cheap?
Well, it would be foolish not to acknowledge that it's a very different market than we've seen perhaps 12 months ago. I think lenders are being more careful about who they lend to, but investors are also being more thoughtful about where they put their capital. And that's all led to a slowdown in deal making, particularly in the second half of last year. I think it's too early to call this the first half of this year. I think we've all looking with an air of optimism, and I think we're hearing, different, even listening to you guys in the last 10 minutes, different views of how the macro is developing. I think at InvestCorp we do believe there's opportunities out there, especially in the mid-market.
And I was going to ask about valuations. So we do see a trend in private equity markets that we saw over the last 2 to 3 years, in that companies in private equity then hold on to deals for a lot longer. What does that mean for valuations actually in the next 12 to 18 months? What are you seeing out there, and what industries or groups do you want to get involved in?
Well, I think we've seen the softening in the valuations in the public markets, especially in the cyclical businesses. It's a well-known fact that private markets lag public markets, and so we are starting to see some softening in private market valuations, especially those that perhaps value more aggressively. We've always taken the view that if you're holding an asset for 5 years, say, you will be investing through some form of economic cycle, some form of macro shock. So when we approach our valuations, and I think this is the case for many investors, they priced in to valuations some form of economic challenge during the holding period. I think, as I was saying, mid-markets opportunities do exist. I think there's some sectors and geographies that are very interesting. There's, the world is not approaching this macro cycle the same in all areas. We've recently acquired a mid-market business through our Indian private equity firm, and then also just yesterday through our technology fund. So opportunities do exist.
Is it more difficult, Andrea, to raise funds? And what does that mean for the deployment of capital going forward?
I think, as I was saying, everybody's just being a little bit more careful. I think we're looking carefully at track records. We're looking at how people managed through the great financial crisis in 2008. We made money buying the right assets at the right price in that crisis. And it's, if you've got that experience in investing through cycles, I think you can still raise capital. I think it's just everybody is a little bit more careful. So the pace has slowed.
Do you think there are more, in general, restructuring exports because it's much more difficult, for example, for companies not to breach some of the loan agreements or loan covenants?
I think the restructuring market is busy. At InvestCorp, we've never believed in over-leveraging our portfolio businesses. We've always believed that managers operate best when they can really focus on growing the business and on value creation. So I think it depends on the investor and their approach to value creation and leverage.
All right, Andrea, thanks so much for joining us. Andrea Davis, their Managing Director of Corporate Investment at InvestCorp. Coming up, An $11 billion case at the UK's High Court could threaten Africa's largest economy. We'll bring you that story next, and this is Bloomberg.
Go.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin. Not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
News breaks. No one covers the world like Bloomberg.
In addition to him pleading not guilty, as we had expected, to 8 criminal counts here, there was a lot else that happened.
1 million people are getting infected every day, and that's going to rise to 3.7 million by January.
The UK is the only G7 economy that hasn't returned to its pre-pandemic level yet.
Bloomberg, your global business authority.
Well, turning to Nigeria, the government there could be on the hook for a debilitating $11 billion payout in a trial at the UK's High Court. Let's get more with Bloomberg's Jennifer Zabazasha. So, Jen, thank you so much for joining us. I mean, when you look, it is crazy. First of all, 11 billion is huge.
Yes.
But also, it's pretty incredible to think that it's all playing out here in the UK.
Yeah, and Fran, let me give you one more part of it. This has been going on since 2010. And so this has really been both sides saying their own claims. And what we're seeing at this point in time is more of the same. So really just a little bit of backstory behind this specific case. It is between the Nigerian government and a company called PNID. PNID alleges that the Nigerian government never followed through on a contract potentially for gas supply. Nigerian government, though, says that this deal was built on bribery, on corruption. And so it went from a $6.6 billion arbitration award to now $11 billion. That's a third of Nigeria's foreign reserves. So we're expecting to see the government continue to mount a pretty strong defense because this couldn't come at a worse time for them.
I mean, terrible. I mean, 11 billion. Could they pay it?
Essentially, no. I mean, what the government has already been dealing with is a shortage of dollars at this point in time, a number of foreign exchange issues, and so it will remain to be seen what they'll actually do. But this could deal another blow to Nigerians who are dealing with 21% inflation. A number of government revenue has been down for a number of months, a number of years because of reduced oil production, and so this incoming administration, we're about a month out from an election, which could serve as a huge, significant guide to what the rest of the continent is going to look like. We're going to have to see what this administration will do specifically with this court case, whether to settle or to keep mounting a defense.
So, Jen, first of all, when do we know the actual decision by the High Court? And how crazy is that it's all playing out in London?
It's, I mean, it's interesting. It was interesting to see what the first day brought about. I mean, we heard a lot of accusations from the company, specifically about potential conflict of interest from the Nigerian government. Nigerian government disputing it, saying that they had a, quote, mountain of evidence claiming that the company was corrupt from the beginning. So the case is supposed to last 8 weeks. That will go into the new administration. And so we don't know who is going to be the next president of this country, but whoever it is going to have to add this to their list of issues that they're going to have to deal with.
Jennifer, thank you so much. Jennifer Zabazaja, they're our Bloomberg Africa correspondent here in London. Now, we're just getting let's catch up with some of the biggest stories that are doing well in the Bloomberg terminals. Let's kick it off with Credit Suisse. Never a day where Credit Suisse is not actually in the news. Now, this was because earlier this morning, the Qatari Investment Authority, we caught up with them also in Davos, today saying that they will boost its stake in Credit Suisse to 6.8% from about 5.6% previously. Now, with the purchase, the QIA becomes the bank's second largest shareholder, just behind the Saudi National Bank, after Credit Suisse issued new shares. Earlier this month, just a reminder, there has been quite a lot of change in shareholders at the Swiss lender, because Credit Suisse longtime largest shareholder, Harris Associates, once holding about 10% of the bank, now holding below 3%. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kate Lines in New York, and Edwards here in London, and this is Bloomberg. What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and That's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
Bonds are an okay bargain, but really nothing exceptional, particularly when we think we see better opportunities on stocks.
As bearish as we are on kind of earnings in the near term, we're actually probably more bullish than most on 2024 because we think we're in this, boom, bust, boom environment.
I think we're making a bottom long term in this bull market.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. The Justice Department takes aim at Google. The government is set to sue the search giant as early as today for its dominance over the digital advertising market. The UK's budget deficit soars to a record. Meanwhile, new data shows private sector economy in the euro area unexpectedly returned to growth at the start of the year. And Poland has formally requested Germany's permission to send tanks to Ukraine. The decision is the culmination of weeks of pressuring Chancellor Olaf Scholz to drop his cautious approach to delivering the military vehicles. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, today has everything really, doesn't it? We've got geopolitics to talk about, we've got tech earnings to talk about, and the macro picture.
Yeah, it has everything except trading in most parts of Asia, Anna, because it is still the Lunar New Year holiday week. So that means markets in China and Hong Kong, South Korea, Taiwan, and others were all closed for trading. Really, the only major Asian market that was trading overnight was Japan. So that is where I will focus. We did see a rally for Japanese stocks. Both the Nikkei 225 and Topix Index were up by about 1.5%. And those gains today actually mean they have now recovered all of their losses since December 20th, which of course was the day we got the unexpected shift in BOJ policy, that tweaking of yield curve control. And of course, that tweak to yield curve control brought the cap on the 10-year JGB yield up to 50 basis points. Today, we trade around 42 basis points, up about 3 basis points on the day. And finally, Matt, I would note the Japanese yen is actually the biggest outperformer in G10 against the US dollar, one of the few that is still rallying against the dollar today. It's stronger by about 0.5%. Dollar yen trading right around that 130 level.
All right, we see U.S. futures, Kaylee, coming down a little bit, only about 0.2% right now. But after the climb that we saw into yesterday's close, up over 4,000. So futures had a strong rally, and they're coming off of that. U.S. 10-year yield coming down about 2 basis points, still hovering right around the same level we saw yesterday at 349, and NYMEX crude as well, hanging at the same level. It's down 0.5%, but 24 hours ago we saw it almost exactly here, 81.18 a barrel. This is WTI. Obviously, Brent is trading in sync, but at a higher level. Bitcoin coming off about 0.5%, but still at just about $23,000. So 22,889. A lot of these numbers are looking exactly the same as what we saw yesterday at this time, with the exception of futures. So we do see futures coming off, but we had a decent rally, as I say again yesterday. Anna, what do you see in Europe?
Yeah, here in Europe, Matt, we're pretty flat across European equity markets, mixed at least, going either side of the flat line. The energy sector weighed down by that Brent price, which, as you point out, is tracking WTI a little lower. So that weighs on the London market. We're down around 0.4% on the FTSE 100 right now. We've had lots of macro data out from Europe, and we'll get more analysis, more detail on this in a moment. But just to go to the response we're seeing, the moves maybe in FX don't look huge, but we are coming off the back of some real dollar weakness earlier on in the session, but that has unwound a little bit. as we've seen the market react to some Euro data and also some data out of the UK. So in terms of the Eurozone, actually we've got quite a positive surprise here for the Eurozone set of data. The composite number for the Euro area coming in positive territory. This is the PMI number. So it's suggesting that we're backing growth for that part of for that economy. That really is in keeping with the more positive stories we've been hearing and telling around the Eurozone economy of late. So that's what's happening in the Eurozone. In the UK, though, things look a little different. We're down 0.5% on the pound this morning. That's after earlier gains for the pound. And this on the back of the data that shows that services and manufacturing are both in contraction territory then in the UK. More on that in a moment. And the 10-year yield also responds to that data. In terms of the issues that the European economies are facing, then there's been no bigger one than the higher energy costs, of course. We continue to track this benchmark as it drops back down. Now at 58 euros a megawatt hour, down another 10% following some substantial declines yesterday, Matt, in session. It seems that the milder weather, the ample storage, the free flow of LNG that seems to have been to the benefit of Europe. Whether that continues as China comes back online is a question, but that seems to be still pushing down on those energy costs.
All right, we'll watch that volatility continue. Meanwhile, Bloomberg has learned that the U.S. Justice Department is getting ready to sue Google as early as today. The case has to do with the search giant's dominance over the digital advertising market. Bloomberg Quick Take's Alex Webb joins us now for the details. So, Alex, what does the DOJ say? Is this a monopoly?
Well, we don't know yet. This is coming from sources that ultimately this is a second case that the DOJ would be opening. It has been in the works for quite a long time, at least 2 or 2.5 years. The really fascinating thing will be to see if or when they announce this, what exactly they're picking on. There are lots of different strands to Google's dominance of the online advertising market. It's whether they've been using strength in one field, for instance, in online and mobile operating systems, to force people to use their advertising lineup of products. So that will be the key thing that lots of people are going to be looking out for.
Okay, so obviously regulation, Alex, is one overhang on some of these big tech names, but there also is the macroeconomic overhang that we are expecting to weigh on their earnings as they begin to report. Microsoft first due out of the gate after the bell today. What are we expecting?
Well, I think some chunks of the market are actually thinking that the bad news has really been front-loaded. The fact that these job cuts, the charges that are going to come out of these job cuts. We've seen something of a rally in the shares over the past few weeks. It's up 9% from a January low. That does, of course, mean, though, that any bad news, if it somehow misses expectations that are already very, very limited, then the stock could be punished further. So, it's 2% revenue growth that people are looking for, which is a very low number in historic terms. Anything less than that will be a bit of a shock.
Okay, Alex, thanks very much. Alex Webb of Bloomberg Quick Take with the latest on the themes dominating the tech sector. Let's get back to the macro. The private sector economy in the euro area unexpectedly returned to growth at the start of this year. That could suggest a softer landing for the region. In the UK, however, output fell at the sharpest pace in 2 years, raising the risk of recession. Bloomberg's UK correspondent Lizzie Burden joins us now. Many voices, of course, already thinking that the UK is flirting with recession. Even the government has said so. Can you break down then these figures that we just had out from the UK, Lizzie?
Yes, Anna. Well, economists had expected that the UK composite PMI would hold steady at 49, but in fact, it fell to 47.8, so below the threshold that separates expansion from contraction. Manufacturing and services both weaker than expected, so another month of weaker activity for the UK. But the good news is there's a fascinating note on the terminal this morning from our UK economists Dan Hansen and Anna Andrade saying, and I quote, "It's touch and go whether there will be a recession in 2023. This on account of all the latest turnaround in the UK economic data. They say if there is a recession, it will be shallow. And what might boost the economy, actually, there's a suggestion from Credit Suisse. They say the China reopening is going to mean that there's lots more Chinese visitors to the UK, and they say that could give us an 8 basis point boost to GDP.
Okay, Lizzie, meanwhile, let's talk about the deficit, too, because we got UK public sector borrowing figures out this morning. That data was also worse than expected. What happened?
Yes, so the budget deficit rose to £27.4 billion in December, had been expected to fall to £17.3 billion. Eye-watering, really. It's the highest December figure since monthly figures began in 1993. Why? Because the government is having to spend on energy support, but more than that, because interest rates have, of course, been rising from the Bank of England, adding to the debt servicing costs for the Treasury. They alone cost £17.3 billion. So it's only going to encourage the Chancellor, Jeremy Hunt, at his March budget to get a tighter grip on the purse strings. We were already expecting a slimmed-down budget, no big tax cuts, no surprises to the markets like Liz Truss's mini-budget. He wants to prioritise cutting inflation, cutting the national debt and growing the economy. But on that second point, already we can see that the government's struggling, Kayleigh.
All right, Lizzie, thanks very much. Bloomberg's UK correspondent Lizzie Burden talking to us about the issues, economic issues the country is facing. Now, Poland has formally requested Germany's permission to send Leopard 2 battle tanks to Ukraine. This according to the Polish Defense Ministry. The decision comes after weeks of pressuring German Chancellor Olaf Scholz to drop his cautious approach to delivering the military vehicles. He's reluctant, really. Mark Champion, Bloomberg senior reporter for international affairs, joins us for more. So, Mark, what is Germany likely to say, and why are they dragging their feet in the first place?
Well, the Germans they will explain that they have a long history with Russia. They have their own history of World War II to be concerned about, and that the image of German tanks fighting Russia in Ukraine is something that they're quite cautious about. The German public is divided. And the government in particular, it's a coalition government, is heavily divided. The Chancellor, Olaf Scholz, is from the Social Democratic Party, which is traditionally quite sort of dovish towards Russia, whereas the Green Party, their coalition partner, is more hawkish. And it was the Green Party's foreign minister who really opened the gates the other day by saying that Germany would not stand in Poland's way if Poland decided to send its Leopards to Ukraine.
Okay, certainly a story we continue to watch. It's been rumbling for weeks, hasn't it, Mark? And it'll no doubt continue to dominate the geopolitical agenda. On another matter, we're looking at NATO and the intended expansion of NATO. Finland has now been floating this idea that maybe they will have to go for some sort of solo entry into NATO after Turkey's Erdogan has tried to block Sweden's accession to the group. Where does this take us?
Yes, I mean, this is Finland has said this is something they may have to consider. It's certainly something they don't want to. They've said from the start they want to do this in tandem with Sweden. But what this is a recognition of is that, where from the beginning Turkey has said it had reservations, had things that it wanted, it's become ever more clear that when it comes to Sweden, the Turks may want a lot more than Sweden's willing to deliver. And most recently, the President Erdogan said that that it may be off the table simply because there was a book burning, a Quran burning incident outside of the Turkish embassy in Sweden by a far-right nationalist. It's not the government in Sweden's fault, but because of freedom of speech and so on, that person isn't going to get jailed. He would be, of course, in Turkey, and Erdogan said this is a matter of respect.
All right, Bloomberg's Mark Champion, thank you so much. And we'll have more on the subject of Sweden later on this hour. We'll be speaking with the country's Minister for Financial Markets, so don't miss that. First, though, let's get a look at some stocks moving in pre-market trading here in the U.S. And I want to begin with Lyft, one of the big outperformers. The stock up about 3.8% after it was upgraded over at KeyBank. The analyst there noting the cost-cutting efforts paying off as well as improving ride-sharing data. So that upgrade is giving that stock a nice lift. There is, however, an analyst downgrade that is dragging on one stock. That would be AMD. It's down about 2.7% after Bernstein downgraded the stock, talking about a weakening PC climate and also semi-destructive, and that's a quote, behavior from its rival Intel. And of course, Intel, for its part, will be reporting today. It's down about 0.5% ahead of those results. One stock or company that already reported is Zions Bancorp. Those results hit after the bell yesterday, and total deposits came up short of expectations. That seems to be what is weighing on the stock this morning. It's down about 2.7% before the bell, Anna.
Kaylee, coming up on the programme, Tatiana Pouhan joins us, Deputy Chief Investments Officer at Tobin. We'll get into a conversation about perhaps the strength of the Eurozone economy right now, its ability to adapt to new sources of energy. That's certainly taking many by surprise. We're also live in Cannes, in the south of France, as Europe's biggest private equity conference gets underway. We will be hearing from some of the leading figures in that space.
Everything is slowing. The economy is slowing. We are probably entering into a phase of lower growth globally, which will last for decades, but we have to cope with that. And in our case, most of what we do in private equity is impact investing. And on that front, impact investing, the things are not slowing at all.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. What's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Season is here.
Wall Street expecting a bit of an ugly season.
People may be overly pessimistic.
We know growth is slowing.
Companies are going to have a lot of questions to answer.
Bloomberg breaks the numbers first.
Tons of banks coming out.
Some of the worst returns when it came to profit.
Markets really like that number.
With exclusive expert analysis.
What's your confidence in your outlook?
You got to be selective.
We still see a lot of opportunity. There is a light at the end of the tunnel.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. We are awaiting tech earnings after the bell. Microsoft, I'm going to kick it off. Texas Instruments also coming out. And it looks like we could see the biggest drop since 2016 in terms of profits for the tech sector in general this quarter. Joining us now to talk about it is Ksenia Galuchko, Bloomberg Equities editor. So, Ksenia, what are we expecting, and what does this mean for markets if tech profits drop so much?
Yeah, Matt, it's very interesting. So while we are expecting this huge drop in their profits, at the same time, the market has been looking ahead, and the Nasdaq has been rallying for the best month since July. And also, it's one of the strongest starts to the year for the Nasdaq in history. I mean, it's been a pretty dramatic turnaround, and it looks like investors are actually much more focused on the future for the tech sector, because the tech sector earnings are meant to rebound in the second half of the year, according to the analysts. So investors are now looking ahead. They're also looking at their cost-cutting measures, and we've seen this week when major companies like Amazon, Microsoft, Alphabet announced major job cuts of thousands of people, the stocks actually rallied in response because investors took that well as a cost-cutting measure.
Yeah, Ksenia, good morning. Yeah, there's a lot of people asking, though, whether that kind of response to cost-cutting measures can be sustained. So in the short term, sure, it improves the margin, and that sounds like a positive. But if it's being driven by negatives, I guess, then you have to wonder how sustained any gains will be, especially as the US is now racing to catch up, I guess. US stocks are racing to catch up with the rest of the world this year.
Absolutely, yes. And you have the likes of Bank of America and Morgan Stanley's Michael Wilson warning investors on being overly bullish on tech, because they're saying that, yes, they're cutting jobs right now, but when they do need to invest in growth, how are they going to do that, right? So this might signal a slowdown from these big tech companies. That's why their earnings and outlooks will be so important to see whether they do see ad sales growth coming back, right? Businesses investing in cloud services and in general in products. Are consumers coming back? China's reopening is actually a major factor here, because China is reopening from a major economic lockdown. So will those consumers drive the sales of these tech companies? This could be a major boon for them.
So it's really more broadly about the macroeconomic picture, Ksenia. And when we look at the economic data, many parts of it have been coming in weaker. We heard from Mike Wilson of Morgan Stanley yesterday, essentially saying that the markets are not properly pricing that weak data. Do we look too optimistic on the probability of a soft landing at this point?
Yeah, it could be a very bad landing if the stock market finally realizes that the recession is indeed coming. So far, investors have been very optimistic. They are betting on a soft landing. They don't think that the Federal Reserve or the ECB will drive the major economies in Europe or the US into a recession, but then they could be proven wrong. And as we've seen with the rallies in the summer, there was a very painful landing after investors realized just how hawkish major central banks are continuing to be. And I think the comments that we've seen from Lagarde this week just reiterate that the central banks will remain hawkish for a while inflation comes down quite significantly. And even then, they might just continue holding those rates at a higher level, which is a concern for the stock market.
Yeah, could be. I mean, it's interesting in that context then, Ksenia, that Bernstein is saying European stocks still have upside after the rally. So despite the fact we've rallied already, and despite the fact we get hawkish commentary coming from policymakers.
Yeah, that's been a very interesting call. So this call in favor of European equities versus the US is becoming more and more popular among major brokers. Since the end of September, the Euro market has rallied much more than the US, outperforming it nearly triple, which is really a unique situation because generally the European market always lags the US. So this was a record outperformance. The main reason is that European stocks remain much cheaper, and Bernstein points out exactly that today. And also their earnings recovery is supposed to be stronger than in the US just because the expectations are also lower. And this is also a very cyclical market that benefits from China's reopening. So lots of industrial stocks, the DAX, CAC 40 with its luxury stocks. So all of these factors actually speak in favor of the European market's outperformance.
Ksenia, thank you very much. Bloomberg's Ksenia Galuchko with the latest on the markets. And for more market analysis, you can go to the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
Names in business are on Bloomberg.
Different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but the vulnerabilities that amplified previous recessions around the world are not present. That omens well for a mild recessions when they come.
Nobody covers business like Bloomberg, your global business authority.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it.
You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. New tensions between the U.S. and China. Bloomberg has learned the Biden administration has confronted Beijing over state-owned companies that may be helping Russia's war effort in Ukraine. The Biden team sees evidence of non-lethal aid being sent to the Kremlin. No one involved is commenting. In Half Moon Bay, California, police arrested the suspect in another mass shooting. 7 people were killed and 1 was wounded at 2 plant nurseries. The 67-year-old suspect was believed to have been a worker at one of the locations. Meanwhile, an 11th person has now died from a separate shooting at a dance hall in suburban Los Angeles. The suspect in that case killed himself. Attorney General Merrick Garland denies that the Justice Department is treating Joe Biden and Donald Trump differently when it comes to classified documents. Special counsels have been appointed in both cases. The White House says the cases are very different and that it's cooperated with authorities. And Bloomberg has learned that digital asset firm Gemini Trust is eliminating another 10% of its workforce. The company, founded by the billionaire Winklevoss twins, remains pressured by a months-long industry slump. Gemini fired 10% of its staff last June as well, after crypto prices plunge. And that, as well as the bankruptcy of Genesis, which is tied to Gemini in many ways, will be topics of conversation on Bloomberg Crypto later today. So tune into that at 1 p.m. New York time, 6 p.m. in London. That is our weekly show that covers the people, transactions, and technology shaping the world of decentralized finance. Anna.
Coming up next, Tatiana Puhan will be with us, Deputy Chief Investment Officer at Tobin. We will get Tatiana's perspective on the year ahead. This is Bloomberg.
today, what are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is Bloomberg Daybreak Middle East.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close.
Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Justice Department takes aim at Google. The government is set to sue the search giant as early as today for its dominance over the digital advertising market. The UK's budget deficit soars to a record. Meanwhile, new data shows private sector economy in the euro area unexpectedly returned to growth at the start of the year. And Poland has formally requested Germany's permission to send tanks to Ukraine. The decision is the culmination of weeks of pressuring Chancellor Olaf Scholz to drop his cautious approach to delivering the military vehicles. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. A lot of geopolitics we've talked about already this hour, Matt. But in terms of the markets, back to the markets and expectations fading as we head towards the start of U.S. trade.
Yeah, absolutely. I mean, futures are down and they're coming down a little bit further. Not a huge drop, just about 0.2%, a little more than that at the moment, but we had a decent run up yesterday, so we're still up over that 4,000 level. You can see right now 4,027 on futures, and right into the end of trade yesterday, futures really jumped. U.S. 10-year yield coming down a little bit less than 2 basis points, so still at about 350 right now. It's interesting, we're going to talk with our next guest about institutional rebalancing, and I'm really fascinated to see, you know, what exactly that means. Is there a specific point in time? How much money are we talking about? What kind of moves we're going to see going from stocks into fixed income? Finally, or not finally, but NYMEX crude, little change right now at 81.44. Finally, Bitcoin, I should say, 23,000 and still holding there. I think it's very interesting that we came up to this level yesterday and we're holding steady right now, 22,921. You can see it's off about 1/3% from whatever the closing time is that we've established for Bitcoin, but it's the same level as it was 24 hours ago. So I continue to find the lack of volatility fascinating in Bitcoin. Kaylee, what do you see in terms of pre-market movers?
Well, one of them is, of course, that big story with Alphabet and the DOJ looking to maybe launch an antitrust suit against Google for its dominance in advertising as soon as today. And that is weighing on the stock right now. It's down about 0.9% in pre-market trading. One stock that is essentially flat, though that story could look very different in the post-market session, is Microsoft, because, of course, it will be reporting results after the bell today. Usually those cross just a couple minutes after 4 p.m. So that's one we'll have to watch throughout the day, obviously, but especially after the fact. Right now it is changed less than 0.1% in early hours. It is a bigger change, though, for stock elsewhere in the technology space, the semi space specifically. AMD getting downgraded at Bernstein. The analysts there talking about weakness in the PC market and some destructive behavior coming from one of its rivals, Intel. So AMD is down about 2.5%. But moving on, an upgrade is Lyft. KeyBank upgrading the stock, noting cost cuts and better ride-sharing data. So it is one of the big outperformers in the early hour session, up about 3.8%, Anna.
Okay, a lift for lift then. Kaylee, this is what we see on the European equity markets, down 0.3% on the Stoxx 600. So broadly, we are seeing a little bit of weakness across the European space today. We started out the day trying to catch up with the gains on Wall Street yesterday, but if a lot of that was tech-driven, then maybe less to catch up on. So weakness here in Europe. We had seen weakness in the dollar. That was a big overnight theme as well. That's faded a little bit as we've seen weakness in other pounds, in other currencies, in particular the pound, down 0.6%, but the euro also a little weaker, down 0.1%. Maybe we'll call this almost flat, really, because we did have some better data out of the European Union, or the Eurozone, sorry, than had been expected. We saw that the composite PMI for the Eurozone came in above 50, and that was not expected. So as a result, some markets reacting to that. The pound, though, subject to some weaker data than anticipated on the UK, and certainly confirmation that we have services and manufacturing both still in contraction territory coming through in that PMI data for the UK today. This is the natural gas price, the benchmark that we track across Europe. Of course, it's been up as high as 340 euros a megawatt hour. That was the story of last summer. Then the middle of this month, we were down at 55, and we seem to be heading back down towards that, 10% lower for this price, Matt. Given considerable weakness yesterday, it seems that the level of storage, the flow of LNG, the ability to cope with the colder weather when it came, and the limited extent of the cold weather, all of that playing in Europe's favor right now.
All right, we'll continue to watch those prices. Let's get over right now to Tatiana Puhan, Deputy Chief Investment Officer at Tobem. And Tatiana, we're going to talk about earnings, obviously a lot, maybe too much. But before we get to that, I want to talk about some of the kind of back office activity. Rebalancing, institutional investors rebalancing is something you mentioned as a potential headwind for stocks as they go into fixed income. It's become increasingly popular with the yields this high. Are there specific points in time that you watch for this, and how much money do you think we're talking about?
I think it's very difficult to say, when exactly this is going to happen, but I think in particular, because the rally in the market that we've seen makes it more likely, that these shifts might happen. So obviously in the beginning of the year, institutional investors, what they're doing is, and this very often starts actually already in the end of the previous year, they sort of discuss, their strategic asset allocations, and they look into, what should change in our portfolio in a very structural way. And I think there is an agreement amongst experts that what happens currently in markets in terms of, market rally and risky assets seems to be not very much in line with, what you could potentially fear might happen, when actually the continued interest rates hikes are really biting into the economy. And if we look at, forward guidance in terms of earnings that will come in now in the next couple of days, we might also get a better idea about, what this will mean immediately to company earnings and so on. And so I think, what experts expect currently is more like a downside risk to these levels that we currently see in equity markets. And for a pension fund that, is supposed to switch towards an asset class that has become more attractive again, which is fixed income, it could be actually a good moment in time to do that. And once they start doing that, this would obviously then, create some momentum that could, help, or not help, but sort of trigger a mean version of, what we've seen in the beginning of the year. So this rally that, at least experts feel is not necessarily backed by fundamental data.
Yes, Tatiana, good morning. So do you feel there's too much complacency in stocks right now?
Yeah, so I think the risk of recession is clearly underpriced. So obviously, there are different scenarios. So there is also, let's say, a Goldilocks scenario, or there's a scenario, that things will get better from here and so on. But there are also other scenarios. And the question is, to what extent are currently investors pricing this in? And so, yeah, there is actually the risk that this is not priced in well enough, because otherwise I could not explain, this very strong rally that we currently see, and in particular also in tech, and in particular also in very large cap tech.
Okay, so are you more skeptical of the US rally or the European outperformance? Because we've seen both to some degree this year.
I'm actually very skeptical of both. So I think with Europe, we should always be a little bit careful, because I think Europe has a lot of structural issues. And so the fact, that Europe now for a short period of time outperforms the US, for me, is not a reason to all of a sudden believe, that Europe is going to be, the big outperformer of the year. So I would be careful with this call. There could be headwinds coming in the moment in time, when the ECB continues to hike rates, and eventually this is going to have an impact, on funding that companies need, and there will be a lot of rollover also in debt this year coming in the euro market and so on. So there are a lot of reasons for me, to be more cautious actually on this euro market rally. And I think also that on the other hand, the US obviously, has its own issues as well.
Yeah.
But I don't think it's very clear, in which direction it's going to go.
Well, if we could return to the subject of earnings then, Tatiana, because you mentioned the risks around that. How appropriately elevated or not is the bar for earnings right now?
So I think, what could happen is actually that these kind of Q4 earnings still come in relatively strong. So I think that's something that, you could actually sort of estimate already from what we've seen, some sort of preliminary numbers and so on. But what I think is what we should focus on is forward guidance. So the impact of inflation and of rising interest rates, of kind of pressure on households, this is something that you see happening with a lag, and it's something which also arises with a lag, obviously, in company earnings. And that's why, for me, what I'm most looking to now, when I look at the earnings announcements that come in this week and next week, I really look into the forward guidance. And this is really interesting to see, what companies expect actually in terms of earnings growth going forward or earnings contraction going forward.
Tatiana, thank you. Thanks for joining us, Tatiana Puhan of Tobin. Coming up on this programme, we are going to talk about Sweden and its role in the European Union. Nicholas Wikman will join us, the Swedish Minister for Financial Markets. We'll talk about their presidency of the European Council, a focus on crypto, what are the priority areas, also the Swedish housing market. This is Bloomberg.
Humanity consumes 500 billion cups of coffee every year. That's almost double what we consumed a decade ago. And yet, coffee production is one of the most antiquated industries in all of agriculture. Climate pressures like drought, heat, and blight are affecting food producers in different ways all over the world, as climate change becomes something we can taste. In the past year, hundreds of thousands of acres of coffee plantations were wiped out. What's at stake are the livelihoods of around 125 million people. Because, if you're being honest, this is a plant that cannot hold on much longer in a changing climate.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now, with benchmark borrowing costs rising throughout the world, housing markets from Canada to Sweden have gone into sharp reverse with no sign of a let-up. Joining us now to discuss and other matters, Nicholas Wikman, who's the Swedish Minister for Financial Markets. Minister, very nice to have you with us to talk about Sweden, the housing market in focus, but also to extend the conversation because Sweden has that rotating presidency of the Council of the European Union. opinion. Let's start in Sweden, though, on housing. Are you concerned about the big drop in house prices? And are you concerned from a growth or a financial stability perspective?
Thank you so much for having me. To start, I must underline that the Swedish bank system is robust, and we have a strong position to handle even a worsened situation. But of course, as you underline, there has been a drop in housing pricing, and especially, of course, there is some reason to concern in the real estate market and the commercial real estate market, where many debts now come to mature in the years ahead of us, and there will be approximately 15 billion euros a year that need to be refinanced in the Swedish real estate market, and of course we must safeguard and protect the financial system from any turbulence or instability due to this situation, of course.
Do you see a need, Minister, for the government to intervene in any way to try or to reshape the housing market towards a different type of mortgage system?
Of course, we read the recommendations from the European Union, from the IMF and the OECD, and of course there is some need for reform, but over the last 10 years we had this situation where money has been almost free, and of course many corporations and more households have deepened their indebtedness, and now when money costs again, some corporations will have problem, but the main priority for the political system is, of course, to avoid a situation where corporation debts become a problem for the financial system. And even though the risks are higher now, still there is resilience in the system, and my strong belief that we will carry out this situation without any huge impact on households and corporations' possibility to invest and have a good daily life.
I want to get your thoughts on the Inflation Reduction Act, Minister. It's been contentious, clearly. We've seen some optimism that the U.S. is willing to work with Europe to make changes. How optimistic are you on that front?
First of all, I'm very happy that the U.S. is back in the Paris Agreement and that we will work together for a greener future with less that's a very, very good thing to start with. Second, it's very important, of course, and we will not contribute to start any sort of trade war with the U.S. On the opposite, of course, Europe, United States, Great Britain is not a problem in the world. It's the solutions to many of the problems in the world, and we will definitely avoid a trade war. And I'm very happy to hear that the U.S. is interested in a dialogue to improve trade conditions, not worsen them.
Well, a trade war would be a bad thing, obviously, but it seems like good, competition if both sides try and boost subsidies to grow their green businesses. Do you see any outlook for that in terms of Europe doing it, and is joint debt going to be a part of that?
Subsidies, state aid, joint debts, of course there can always on the marginal be improvements for investments and for the green transition, but in the long run, to have better conditions for new investments for the green transition, we need good institutional condition. It's national questions on tax policy. There is a European discussion on a better common market for capital to ensure that fast-growing companies can have a good capital supply. So I think we should at first look at normal business conditions and try to improve them and have long-run sustainable solutions for growing corporations and for new firms and for new ideas to come into the market. State aid, subsidies, common debt programs and so on could be discussed, but that's always on the margin. We need good institutional conditions for entrepreneurship to really fasten up the green transition.
If we could turn to the subject of crypto, how has your attitude toward regulation changed over the last several months, given the fallout from the implosion of FTX, and how do you view any kind of broader financial stability risk emanating from that space?
Well, First of all, I think we will be humble in our presidency that perhaps we will not solve the question on crypto on our 6 months as presidents. This is a very new area, and I think we must be... The market is still so small that it has been put very much risk to some individuals, perhaps some of them not aware of how much risk they are taking, and it's positive that the European Union now will have some regulatory framework to try to pave the way into the future. But how large this crypto will be, it remains to be seen. But the European Union will lead the way, and we will have a framework for dealing with crypto and in the future, and that's a good thing. Where the future will take us, I will say that the jury is still out when it comes to crypto.
Minister, if I could take us to a conversation around the post-Brexit relationship between the EU and the UK and the resilience of money market funds. It seems that the UK is worried about UK investor money that is in EU financial centres, and the turmoil in markets in September threw this into focus. The Bank of England governor has said he's working to improve the resilience of UK money market funds, but he wants Europe to do the same because of the cross-border nature of some of these investments. Is Europe in a position to make money market funds more resilient in the short term?
First of all, let me make a personal remark, and as I already said, that Britain, the European Union, the United States is the solution to the world's problem. It's not a problem in itself. In the European Union now, we're working hard for more resilient banks, which is good. Sweden had a very bad experience in the late 80s and beginning of the 90s of having not resilient bank, having a huge crisis in the real estate market. And in our presidency, we will make our most to have more deals and to come further when it comes to more resilient banks. And it's my advice for the whole world to keep their bank system as stable as possible. And the more we can do together, the better it is.
All right, Nicholas, thanks so much for joining us. Nicholas Wikman there, Swedish Minister for Financial Markets. We appreciate your time. Tune in, by the way, to Bloomberg Crypto. That's today at 1 p.m. New York time, 6 p.m. London. It's our weekly show that covers the people, transactions, and technology shaping the world of decentralized finance as more and more officials consider regulation. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
think today it's easier for a black entrepreneur to start a company, or no more easy than it was 20 years ago or 30 years ago?
If it were easy, you would see more Bob Johnsons, more Michael Jordan, more Magic Johnsons, and Oprah Winfrey's and the like.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. Now a look at what is coming up for the rest of the day. At 8:30 a.m. Eastern Time, Oscar nominations will be announced. Then at 9:45, the latest U.S. PMI data following Europe and the U.K. earlier. Then post-market, we're going to get earnings from Microsoft. That's the first of the big tech companies to report. And in Cannes, thousands of private equity firms are gathering for EPEM, Europe's largest private markets conference, Matt.
All right, very interesting stuff. Let's talk about that conference right now. After a tumultuous 2022 for private equity, driven by economic and geopolitical uncertainty, the sector is looking to bounce back. Over 1,000 companies are gathering in Cannes for Europe's largest private equity conference. Allianz chief economist says the industry is optimistic about the new year.
So what happened in 22 was, there was nowhere to hide basically on the financial markets. And so the private equity world has not been, immune or has not defied gravity. And so people are looking to 2023 a bit more hopeful, thinking that maybe monetary and financial conditions are going to stabilize after central banks are done with hiking very abruptly.
Danny Berger joins us now live from Cannes. So Danny, what are the challenges facing PE now as recession fears are weighing on so many sectors in 2023?
Well, for one, Matt, and probably the biggest, because this is what this industry is supposed to do, is deal making. The flow has really dried up, and we know this just from looking at bank earnings, for example. M&A levels are down dramatically, but one of the big drivers of that, and this is directly connected with the economy, is that banks are really hesitant to give financing right now. Leverage financing is very difficult too. So I spoke, for example, to the TKO deputy CEO who said to me, we're doing deals with less leverage now, so you really need to juice more growth out of the companies. You can't just lever up and expect returns the easy way.
And of course, Danny, this all comes off the back of a year that, with rising interest rates, no doubt was pretty bad for the sector.
It was bad, but this is the thing, Anna, because private capital isn't marked to market, as in it doesn't trade every day like a public exchange does, it looked like the returns were better. Now, whether they actually were or not is up to debate, but it's what hedge funder Cliff Asness has called volatility laundering, this idea that you think you're getting a better return because volatility is smoothed out, but again, it's not just being marked to market. So I spoke with the co-founder of LGT, who manages private capital for the royal family of Liechtenstein, which is great in itself, but he basically said that the industry is in denial. Valuations are going to have to come down at some point.
Danny, thanks so much. Bloomberg's Danny Berger reporting from Cannes in the south of France. That is it for Early Edition. Surveillance is ahead. They'll be hearing from Pamela Gordon, Simon French, among other voices. This is Bloomberg.
most fascinating entrepreneurs, because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, so the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg.
I think people are banking too much on the Fed being more modest.
We do think that we're still a long way off from the Fed really signaling any sort of even pause.
We're very close to the end of the hiking cycle, but we don't necessarily think we should be pricing in cuts for the European Central Bank, the Bank of Japan. They're behind the Fed. We've only just got to neutral in Europe.
We don't know if those rate cuts are going to come in 2023. We think it could be a 2024 issue.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Mr. Farrow in London after Tots Takeout Fulham. Lisa Abramowitz finally back from Switzerland. She was a shadow of herself yesterday.
Oh, come on.
And I'm here in New York as well. And what we know is we're not in this equity market, either are you, and that's going to be a big theme through the morning as well. It's a short squeeze. It's this, it's that, Lisa. The bottom line, equity market up.
How do you get faith that this is something sustainable, that this isn't just a head fake? And I think that that's really the question, especially as it's led by the riskiest assets, whether it's the emerging markets, whether it's Europe versus the U.S. It's a complete reversal of what we saw for most of last year.
A lot of thoughts on that. We'll talk on a global basis with Eric Robertson here in a moment. I'm going to go back to the legend that we had yesterday. No, not John Farrow. I'm going to go back to Ralph Ancampora was with us, and he said, look, there was an October bottom. That's a lonely view from the technical legend.
I liked how you put technical analysis into its place, basically saying it is one piece of a puzzle. It's not the only piece.
Yes.
And that when you look at that piece, that momentum has lasting power. How does that fly in the face of all the gloom and the doom that still is pervasive underneath some of the temporary optimism that some people have?
The technicians will say that you can see the economics, the Fed babble, and all that through what you see in the charts. And right now, I'm going to say it's a boring January screen to the February 1 Fed meeting. Futures at -8 here. But Lisa, there's lots of incongruities here because we're coming out of a pandemic. China's opening, and there's just massive uncertainty around Ralph's October bottom.
Well, here's what I've been thinking about over the past 24 hours. European economic data has continued to surprise to the upside. Granted, the bar is as low as you could possibly imagine. In the U.S., it's the opposite. It's been disappointing on the margins a little bit more often, and you're starting to see a bit of a weakening, particularly with leading indicators. At what point can you see that divergence continue with Europe outperforming at a time when a lot of people were underinvested, right? That's always been the widowmaker. Is that really going to be perhaps the winner this year?
I don't want to steal the thunder from your brief this morning, which we'll get to in a moment, folks, but the bottom line is there's a ton of economic data out there today, and the recession fears are tangible, yet they're really not yet in the statistics. I mean, that's the heart of the matter.
They're not yet. I mean, some people might say perhaps on Thursday we'll get that GDP number and we'll rethink that. But right now, you still see enough momentum, particularly in the labor market, because people still can get hired.
We're going to have to see on this. And again, February everyone is at Fed meeting. We're starting to piece together our Fed special. Is John back from London by then?
I don't know. I'll talk to my people. We'll have him talk to their people in Fulham. I like that it lasted all of like 5 seconds for you saying Fulham.
No, we watched it last night. We'll get to the soccer talk in a moment, but we drank the Pharaoh Kool-Aid. I mean, that's all there is to it.
We drank the Pharaoh Tang.
2 years ago, 3 years ago, you and I would be like, what? And there we were watching Harry Kane score one magical goal. Let me do a data check right now. Lisa will have the brief for you. Futures -9, Dow futures -71. The VIX under 20 for a bit, 20.03 right now, off that strong market yesterday, off that strong market Friday. I like what Zero Hedge said, just a massive short squeeze out there as people exit the gloom as best they can. BitDog 23,000, I'd point out. And we're both watching oil. Brent crude 88.17. Yeah, it's pulled back, but just fractionally, and that gets us to be briefed on a Tuesday.
Yeah, especially with that oil price going up. At what point do you start to see that percolate, that optimism percolate into some of the other instruments out there, commodities and beyond? 9:45 a.m. This is the key data point that I'm watching today. U.S. S&P Global U.S. Manufacturing, U.S. Services, and Composite PMIs for the month of January. Earlier this morning, we got some data out of Europe, and it was much better than expected. The private sector growing at a faster clip than people had expected. Do we see the same thing in U.S. services? We have seen it decline, where you have seen a retracement.
9:45.
That, to me, is going to be interesting. 1 p.m., the U.S. is selling $42 billion of two-year notes.
Thank God.
We've seen the two-year yield off its earlier peak. There is a dissonance that continues in markets with people not having faith the Fed is going to really go through with what they're saying, which is go to 5% and hold it. And yet, at the same time, the Fed keeps doubling down on that.
And now for the dumb question of the morning. I'm in charge. Surveillance model. Who buys the auction? They're going to sell it.
That's a great question.
Who do they buy it? Who buys it?
So traditionally, it was the dealers. The primary dealers were responsible for taking down a certain number, a certain proportion, or anything that wasn't sold to independent buyers, to institutional investors. But they have taken on a smaller and smaller chunk, as a lot of institutional investors have been playing in these auctions. Okay. Also, aftermarket, Microsoft and Texas Instruments are among 18 companies that were reporting today. These companies aftermarket. Microsoft, how much cloud computing are people still investing in? That is really what I'm going to be looking at, because that's one of the reasons why this stock has underperformed as much as it has, Tom.
Right now, let's get to it. A global conversation with Global Head of Research at Standard Chartered. Eric Robertson joins us now from Dubai on the greater force of EM and international investment. Is it legit this time, Eric? Is it really the moment for EM and international equities?
That's a good question, Tom, and good morning to you guys. Look, one of the things we learned coming out of the global financial crisis was that when markets started to recover after March 2009, it was those assets which had been beaten down the most over the previous few years which recovered the most aggressively. And we're seeing a repeat of that today. It's emerging market equities, it's emerging market currencies, it's credit. And look, it doesn't necessarily require a lot from the central banks, but perhaps just to stop hiking and to take away some of that monetary tightening risk and the easing of financial conditions that brings with it. So I think there's an element of short covering, but also an element of people just getting back some risk on their books.
Tell me about the dollar dynamic at Standard Chartered. You are so advantaged by your foreign exchange team. Do you believe in a persistently weak dollar as an overlay for equity markets globally?
I think that's right. We do believe that last year the dollar put in a medium-term peak. I suppose what I would observe is that we've already unwound about 75% of last year's dollar gains. So we've done quite a bit of normalization very, very quickly, Tom. I think in the very short term, the dollar probably consolidates those losses, and some of the foreign currencies that have recovered quickly probably stabilize. But over the medium term, as the Fed stops hiking and financial conditions ease, we do expect investors and other participants to allocate a larger share towards foreign exchange.
How much of the European bet that so many people seem to be doubling down on really is tied to China's reopening?
I think it's a part of the story, Lisa, and I think it's a good point. But you also made a point earlier in the show in the sense that people have been structurally underweight European assets. People have been structurally of the view that Europe would underperform economically. And as we're seeing now, we're seeing upside surprises in the data this feared recession, the food and energy crisis, which was so talked about last year, is just turning out to be less threatening than expected. And so I think there's a very good case for Europe to at least outperform some of those really downbeat expectations as we come through a more mild winter and a reallocation of those assets, as you guys described earlier.
We're just seeing right now a headline across the terminal that Germany is set to forecast economic growth of 0.2% this year, which I find compelling considering that so many people were expecting recession.
This is from Camille Kamaros. This is Bloomberg reporting on data to be reported tomorrow. This is an early report where perhaps it's leaked out. I'm not going to say that, but we're positing it that Wednesday we will see out of Germany that 0.2% annual inflation, which is a little bit better to grow by 0.2% versus a contraction rather of 0.4%.
Which raises a question how much further things can go, and I'm wondering how much this is expressed in the euro. How much can we see, 115, 120, Eric, on a euro versus a dollar back to levels that nobody thought was even possible because of the strength there, and on the flip side, the U.S. kind of passed the peak in certain levels?
Look, I think that's right. I'd be a little bit cautious with levels around 120 or above in the euro. I think that makes some very generous assumptions about the trajectory of their recovery when it comes. But you mentioned China earlier. We have an above consensus view on China GDP for this year of 5.8%. But most of that escape velocity in their economy is going to come in the second half of the year. So I think for Europe, it will be a slow and steady recovery. But as you guys correctly pointed out, just beating those very downbeat expectations may be enough to bring capital back.
Eric, I look at it in the sophomoric way to look at this is it's a zero-sum game. If China goes up, we go down. I don't buy it. And the basic idea is if we get a 5.8% China recovery, if we get a lift of the Pacific Rim where your Standard Charter expertise is, that's got to lift all boats to a first order, right?
Absolutely, Tom. And I'll take it from two different angles. The first of which is that ASEAN, so Southeast Asia, is expected to grow 5% this year. If you've got ASEAN at 5%, China at 5.8%, that's going to lift a lot of economic sentiment around the world. And I agree with you. It's not a zero-sum game. If China and ASEAN are improving, India is improving, that should ultimately help the recovery in global trade as well. And I think that will be a net positive for the West.
Eric, thank you so much. Eric Robertson from Dubai. He is with the Standard Charter Bank. Lisa, this is really important. Again, I want to reframe this, folks, so we're careful. Bloomberg reports a day ahead of time. According to people familiar, the German economic statistics will get those official data from the government tomorrow. But what's important here that Mr. Robertson talked about is flipping from a negative statistic on a monthly basis or annual, whatever, to a positive statistic. To go from the word contracted to the word grow is not a small matter.
But if you read a little bit further, are we just taking away some of the growth from the next year, right? I mean, this is basically interesting to me. No, honestly, how much is this basically saying, okay, perhaps Germany will grow a little bit this year, but it will grow less the following year than previously expected? Because that seems to be what this forecast is saying. Because if you get the dynamism now, do you get the real reduction in inflation and the conviction to really fight that in the same kind of way?
I'm not going to crystal ball gaze this because as a matter to their southeast, southeast, whatever, they got a war going on. And I'm just not, I just can't go to the crystal ball gazing. And importantly, who cares what I think? I don't think the ECB can go to crystal ball gazing. They're going to look at the facts as they're displayed. What's a disinflationary tendency?
I get your point. Making a prediction right now, very difficult, but that is what the German government, at least according to this report, is expected to do, to downgrade its growth forecast for 2024 while upgrading the forecast for this year.
Again, Bloomberg reports a shift in Germany from contraction to maybe some optimistic growth. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Poland has formally requested Germany's permission to send its German-made Leopard tanks to Ukraine. That comes after weeks of pressuring Germany's Chancellor Olaf Scholz to drop his cautious approach to delivering the tanks. German law requires approval for the re-export of military equipment. Bloomberg's learned the U.S. Justice Department is set to sue Google as early as today.
The case has to do with the search giant's dominance over the digital advertising market. Google controls most of the technology used to buy, sell, and serve online advertising. The company has argued that the market is a crowded and competitive one. In the UK, there's more evidence that the economy probably has slipped into a recession. British companies signal that output has dropped at the fastest pace since the start of the pandemic. Meanwhile, the government's budget deficit rose to a record. Soaring interest rates have jacked up the cost of debt service. In Half Moon Bay, California, police arrested the suspect in another mass shooting. 7 people were killed and 1 was wounded at 2 plant nurseries. The 67-year-old suspect was believed to have been a worker at one of the locations. Meanwhile, an 11th person has now died from the shooting at a dance hall in the suburban Los Angeles. That suspect in the shooting killed himself. And Twitter has been hit with 2 lawsuits for not paying rent. According to filing by its landlord in San Francisco, the social media company failed to pay the more than $3 million monthly rent for December and January. In the UK, the Crown Estate, which is owned by the British monarch, filed a suit against Twitter over its London location in the West End. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make.
Earnings season is here.
Wall Street expecting a bit of an ugly season. People may be overly pessimistic. We know growth is slowing.
Companies are going to have a lot of questions to answer.
Bloomberg breaks the numbers first.
Tons of banks coming out.
Some of the worst returns when it came to profit.
Markets really like that number.
With exclusive expert analysis.
What's your confidence in your outlook?
You got to be selective.
We still see a lot of opportunity.
There is a light at the end of the tunnel.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Have different rules for Democrats or Republicans, different rules for the powerful and powerless, different rules for the rich or for the poor. We apply the facts and the law in each case in a neutral, nonpartisan manner. That is what we always do, and that is what we do in the manners that you're referring to.
He has been more quiet than the average Attorney General. Merrick Garland is your United States Attorney General, speaking there on, I believe, documents and the treatment to be had moving forward. Right now, and for all of you worldwide, we revisit what we've revisited in America is revisit death. The governor of California simply calls it tragedy upon tragedy. And what I've noticed with Anne-Marie Horton in Washington is she and I have perused the papers, we've listened to the politicians, and basically, Anne-Marie Horton, thoughts and prayers are out the window. Nobody's talking about thoughts. Nobody's talking about prayers. We've had multiple mass killings in hours. Maybe you measure it days. They happen to be of an Asian persuasion. It's one and all the same. Where's the bipartisan support to do something like there's bipartisan support to do something about China?
It's just not there, Tom. I mean, the House in the previous Congress did pass a bill which was looking at more gun control, but they didn't have the votes in the Senate. And we spoke to Congressman Ro Khanna of California yesterday, and I asked him about these shootings. And until you have this bipartisan support, like you're asking for, there's not going to be any big movement when it comes to guns in the United States. And that's where it is right now. I'm not really sure how much more the pressure could be. You had Uvalde shooting, recently.
Right.
That was what, last year when children were killed in elementary school. You had last night 2 shootings in Northern California on the heels of a ballroom shooting. And as you say, these is Asian Americans. They were, especially Chinese Americans. They were celebrating
Right.
Lunar New Year, and this is all you're hearing from politicians, our thoughts and our prayers, but there really doesn't
Right.
seem to be any action on how do you change this culture in America.
Troubled individuals seem to be geographically spread out and also politically spread out. I believe we could suggest California rather has low Republican registration. Maybe it's a more Democratic tilting state. In Washington, how do they synthesize a shooting in California versus a shooting where Trump won by 20 points in the South? What's the difference?
Well, I think it gets to what I just said, this idea of gun culture, mass shootings. This happens in America regardless of political affiliations. I think also in California, there's a lot of questions about, the weapon, at least certainly what I know, the weapon that was used in the ballroom shooting, that kind of weapon is banned in California. So this is really troubling for individuals in California who feel like they've made progress. But clearly, obviously, nothing will change unless it's federal.
It's a delicate conversation. As usual, Anne-Marie Horton is prepared and really gives us perspective. I did that, Lisa, for our international audience, because in my travels worldwide, what I've noticed is people are just stunned by the uniqueness of this in America.
I think we're all stunned at the uniqueness, if you want to say that. It's a tragedy for sure. At a time when there seems to be some sort of stasis in Washington, and Anne-Marie, I am curious about that stasis at a time when we're talking about the debt ceiling, we're talking about a fiscal impulse. What kind of pushback are we getting? What kind of intel in terms of what cuts are required to get the government functioning once again and eliminate the debt ceiling from some of the strain?
Well, Lisa, it depends who you ask, right? Because the Democrats say there will be no spending cuts in terms of they don't want to be held hostage to spending cuts to raise the debt ceiling. Well, with the Republicans, they definitely want spending cuts. They want to take a look at the budget. They want to keep the next fiscal year capped at the previous fiscal year. They want $130 billion shaved off the budget. The question you're asking is a good one. Where does that come from? And this is something that Republicans even are debating amongst themselves. But we did see during the rally of the speaker vote that one of the things that was on the table, even being discussed, was even potentially cuts in defense budget. So it does seem like all spending is on the table that Republicans want to look at in terms of cuts.
What is bipartisan in terms of a good area to cut? Is there a sense that there are areas that do have fat to trim?
I'm not really sure, because at this point, there's so much spending that individual groups are rallying behind. I'm not sure there's one issue that could be bipartisan at this moment, because everything feels very partisan in Washington, right? Even defense, maybe that could be one if Democrats and Republicans were able to look a little bit deeper, because for a while there was always Democrats who, long-term mantras, Democrats are the one that want to cut defense spending, put it more towards domestic. Now you have Republicans even looking at it, but it's a very difficult time to be discussing defense spending when the United States is sending military aid to Ukraine. So even that moment in time, you'd think in the past, maybe defense could be an area. It doesn't look like it.
Anne-Marie, thank you so much. Greatly appreciate it. In Washington, Anne-Marie Horton, our Chief Washington correspondent, also ensconced at the White House. We don't look at GE the way we used to look at GE, do we?
Well, it got broken up, and it has a very different kind of picture. But right now, they just reported earnings, and it came in disappointing. They expect the adjusted EPS for 2023 at $1.60 to $2 versus the estimate of $2.37. So you can see the reaction in shares. They are down 1.5%. But it raises questions to me about how much you're going to see an ongoing bifurcation with the manufacturing side continuing to be in the slump that we've seen for a bunch of months now versus services that still chug along, right? I mean, we continue to see certain companies and businesses, particularly the airlines, that do well. How much does this diverge, and how much does it converge with people going to the industrial side?
I would not take too much into this, and that it's very, very clumsy right now. They're spinning off this, spinning off that. There's 3 units. They're going to be 3 separate companies. Whatever, the strategic vision is here. It's a stream of headlines, some very disappointing, including 160 to 2 versus an estimated 237. But I'm going to suggest the level of noise in this earnings report is off the chart.
I would agree with that. $400 million of separation costs in the quarter that they announced, to give you a sense of what we're looking at. You also are looking at the expectation of high single-digit revenue growth in this year. Is that good enough revenue growth at a time when costs are increasing? I'm curious, as we dig through some of the earnings, not just of GE, but more broadly of other companies, the 18 that reported the S&P today, how much you start to see that margin compression versus some plateauing after last year. Right. We saw companies kind of bake that in a little bit.
Lawrence Culp has done this before, of course, the Danaher, and he's now the CEO and chairman of General Electric, and he notes aerospace with a very, very nice lift, solid revenue growth, power, double-digit growth. I think that's a little better than expected as well. But the level of noise here, this is not CFA 101 with GE. This is tear a company apart and put it together again. And to William Cohen's magisterial book on the collapse of GE, what this is really about, Lisa, is a company that doesn't have the presumed financial stability of GE Finance that was that wonderful keel, if you will, on the boat years ago.
The reason why I diverted to this idea of where the technology, the industrial complex was going to be, is because we're about to get Raytheon Technologies and Halliburton among the companies that are reporting earnings ahead of the opening bell today. How much do we see some sort of similar softness versus the opposite, right? The opposite story, especially as people invest so much in the conflict in Europe and beyond.
Earnings out, Microsoft later today. We are into that interesting season. Of course, technology earnings coming up, wrapped around Fed Day, February 1, February 2, and such. Futures deteriorate, -7. S&P futures down -11. Please stay with us from New York, from London. John Farrow in London with Simon French. This is Bloomberg.
what do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist. You know, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, probably I try and play that role.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg. Bloomberg Surveillance. Good morning, everyone. Lisa Bramwitz and Tom Keene in New York. John Farrow in moments from London with Simon French. Really looking forward to that. Earnings Derby is on. What we're going to do is try to find the ones that speak to the underlying economics and the path forward for the nation. And you can do that with Johnson & Johnson out with their earnings. Lisa's been killing it on them. And I'm going to bring up, Lisa, that this is the first real earnings report I've seen where we had strong dollar, foreign exchange adjustment, and now what in Q1 of a weaker dollar? So there's going to be a whipsaw here down the income statement as you adjust for dollar dynamics for multinationals, make up a huge part of American business.
What stands out to me is the resilience here, despite some of that volatility. They said that the decline that you saw in the fourth quarter sales were driven by that foreign exchange adjustment that you're talking about, as well as reduced COVID vaccine sales, but still expecting earnings per share to come in above estimates. So this to me is interesting. If you look at each particular segment, you could see one by one trying to offset one another, but R&D expenses, this stands out to me. Expenses are going down. They came in below the expectation. And marketing, selling, and administrative expenses also came in below the estimate, albeit marginally. But this is an issue of cutting expenses, and we've seen that across the board.
Q4, the last 90 days, and this goes to Gina Martin-Adams' conversation yesterday. Sales come in a little bit light. I'm not going to make too much of that about a multi-division, multinational. But with disinflation, as Phil Correa, pioneer, said years ago, the bright lights of inflation create revenue. So if there's disinflation, the lights aren't as bright, I think, is how you circle that.
Right. How much can they not basically raise prices as much?
Yeah.
At the same time, can they cut costs perhaps a bit more because there's less pressure? And are we starting to see that around the margins?
I think we're going to see it. You know, the history of these slowdowns is it's not just tech and not just banking. We're going to see cost cutting. It's, you know, it can be
on the margins.
On the
well,
margin.
Yeah, but that's exactly R&D expenses, $3.84 billion versus the estimate of $4.12 billion. This isn't, you know, catastrophic, but it's there.
For those of you on radio, J&J with a little bit of a lift up a stick here, and I call it 0.5% right now. We'll monitor that. Futures -7, Dow, they deteriorate, -13 now. Dow futures, we do for John Farrow, -86.
He thanks you.
The VIX, 20.10. Oil, 88.26. And we've got to do sterling for John, 123.14. He loaded up on the swag last night at Fulham.
No,
I mean,
it's
loaded
the opposite.
up.
He's paid in dollars. Anyway.
I don't understand that. Joining us from London right now in an important conversation, John Farrow joins us this morning. John, how are you?
I was just asking the floor manager, Tom, if it's too late to unclip the mic and walk away. Is it too late?
You've done that before.
We're live on air now.
I can understand.
I have.
Good morning.
I have.
Good morning.
Good morning to you. We get lucky this morning. Simon French, Chief Economist at Panmure Gordon, joins us. The number of the morning here in London, a little more than 27 billion sterling. That's the budget deficit for the month of December. That's a record for the month, Simon. Should I be concerned about that?
If you think RPI, which is the retail price index, the rate of inflation by which a quarter of government debt is indexed, so about £600 billion worth of UK gilts are indexed to the RPI, running at 13%. If you think it's going to stay there, get worried by that number. If, however, and we've got a note out this morning looking at the pathway now for both RPI, CPI, the Consumer Price Index, if you think that's going to fall pretty dramatically, then this is a, dare I use the word, this is a transitory problem.
Well, you've used the word.
I have, because in the context of servicing the government debt, particularly the aspect that drove this morning's data, the RPI coupon, it is going to fall away quite dramatically by this time next year.
It comes at a time where the public sector is asking for a pay rise, going on strike. Ambulance workers started yesterday. Are they going to get that pay rise?
They are, but they're not going to get one that keeps pace with the rate of inflation. So largely asking across the blue light services for more than 10%, keeping in pace with RPI, CPI. What the strategy here is from the UK Treasury is multi-year settlements. Multi-year settlements that try and smooth the one-off impact of providing a potential wage price spiral stimulus with a 10, 12, 13, 15% increase by saying potentially 444, 555, a multi-year settlement that recognises that we will be in a very different inflationary environment in 24, 25, and actually, if you like, buying off the smoothing of that underlying inflationary pressure through a multi-year settlement.
Looking at the PMIs this morning, Eurozone PMI, the composite, I believe that's the first above 50 reading going all the way back to June. You've got the German government